All right. Morning, everyone. Oh, good afternoon, everyone. You're all welcome to today's session. This is the August edition of our training from Droidedge Consulting, and we assure you are going to be getting, the best training so far. Like we said, we promise this training would actually be very, very practical. And I'm sure majority of us has actually, register for the software platform that we will be using, which is Sage Business Cloud. So we don't want to waste too much of our time. We would actually be, going right straight into the activities for the day. So basically, today we'll be looking at Sage Business Cloud. And before we go into, the details of would it be what is Sage Business Cloud? How do we process, transaction using Sage Business Cloud? How do we, do bank reconciliation? How do we even, all this breakdown before we go into it? We take a step back to even reflect on what accounting software is all about, and we give you step by step, breakdown, and we try as much as possible to demystify all, the terminology, so that afterwards you would actually have, you know, a lot of knowledge relating to accounting software and ERP. By the end of this session, you'll be able to differentiate between an accounting software and ERP software. You'll be able to process transaction, add your customer, and set up your organization's default settings. You'll be able to know quite a few things, and most importantly, uh, being that majority of us here are accountants, would move from being a manual accountant to a digital accountant, which is what is expected, from us. So, and that alone would actually put us on the global employment scale, because only a few people, less than 10% of the accountants we have in Nigeria today can actually use a cloud software, effectively. So our goal here is to actually eliminate those barriers and actually put you through, give you the proper understanding of what an ERP system should look like. Would also give you an overview of what an accounting software should look like before we now dive into the order of the day, which is say business cloud accounting. And to actually, handle the session for today, that will be done by my colleague here. He addressed us a few seconds ago. His name is Hadeomi Aziz. Oh, sorry, by the way, I didn't even introduce myself. My name is Olabi Oshiade, and my colleague that will be taking majority of the session today is Hadeomi Aziz. So he's already sharing his screen. So he will be putting us through on the majority of what we do. So let's check the participants we have online. If they are good to go, we already have 20, 22 participants online. So let's, I think others will just join us. Others will join us. So my colleague Aziz, are you ready for us? Are you ready to take us through the journey of the accounting what?
Yeah, very much. Good afternoon once again. Just like my colleague Olabi introduced, my name is Aziz Adeomi, and I'll be, facilitating the major part of today's training. And today's training promises to be an exciting one, right? Isn't being that we'll be walking us through, how to use, an accounting system like Sage, right? And how to use them to manage, organizations' activities with respect to finance, inventory, right? Banking and receivable payables and others. And for some of us that have been using or that are familiar with accounting system, trust me, you'll still be able to pick up one or two additional things during the training. So all I request from you is your time, and please do not endeavor to ask, questions. You have the facility to raise your hand. If you look at from the options, you have the facility to raise your hand if you need to ask any question, or you can even drop a chat, in the Q&A section, right? So we are very much, good to go. Others will be joining. Okay. All right. So a quick insight as to what we'll be looking at. We will be looking at say business cloud accounting before we even log into the system. We'll be looking at, you know, uh, when you hear Sage, what's the company known for? What are those various Sage?
Um, sorry. Before sorry, my facilitator, before we dive into the session, we just want to know if everybody can actually hear and see us clearly. I see Olukoya Timothy raising hand. Do you have questions or you have challenge, visualizing the screen we are sharing? So we want to know if we all can actually, see and hear us clearly. So, Timothy would be giving you access to speak now. So we want to know what the challenge is. So, Timothy, you can please proceed to ask your question. Uh, please, if you are still interested, Timothy Olukoya, please ask your question. And please, we need people to just go to the chat room. If you have a question, you can't see the screen or you can't hear us clearly, please, you can kindly drop a chat there so that we actually attend to you. You can drop a chat in the chat session. Can you all see our screen? Can you all see the screen?
Yes,
My colleague
I can
sharing.
see it. I can see it from here. Good afternoon.
Yeah, good afternoon. So I saw you raise your hand.
Yes, I thought we were meant to raise our hand to indicate our presence in the class. So I'm sorry for
Okay. So
distracting.
you raise hand if you want to ask question, yeah, or you have any
Oh,
challenge. All right.
please let's
All
go
right. I
ahead.
think people can see the screen is currently sharing, so you can see. So let's
You can, you can.
so Aziz, let's continue.
Still muted. Okay. So we are good to go now. Okay. So I was trying to, bring to our attention some of those things we'll be looking at today before I dive in proper. So we'll be looking at introducing us to the accounting system, as the case may be. We'll be looking at, what are those accounting systems and ERP softwares, their differences. We have a couple of them. We have Sage, QuickBooks, and the likes, right? And I'll walk us through that in a moment. Then we would also look into detail, the application which is Sage Business Cloud Accounting, right? And we'll be, we've sent an email to us on how to create our companies, but we'll still be working us through how we can now set up our companies. We'll set it together, right? We'll set it together with all our records that we've provided. If you from the platform now, you would have seen, that the we've sent across the training manual. We've equally sent across the class exercise, which contains some of those activities that we'll be carrying out. Right. So we'll be looking at creating general ledger accounts. What is it that we need to know, when creating a general ledger account, more or less like chart of accounts, right? In some cases, then be creating suppliers, be creating our items in the system, we'll be creating, customers, we'll be entering opening balances, then suppliers related transactions, and all, specifically for today's session of the training. So it promises to be an exciting one, right? And let's just, dive right into it. Okay. One moment. Okay. I class exercise. All right. Okay. So I'm sure my colleague must have introduced our firm to you. Okay, so we are from Droidedge Consulting, and we are a software company, a software consulting company. So we do implement, and support our respective clients on accounting and ERP solutions. And we also facilitate both corporate and individual trainings. Which this is actually one of such, right? So we've shared with us our company profile, but as we proceed, we would be chipping in more, of that. So now, when we hear Sage, what is Sage all about, right? Sage is actually a company, a software company, right? So they built these applications, and of course, the software company founded by David Goodman, rather, Paul Muller and Graham Wiley in 1981. So it's actually a team of people who have come together, to create, this Sage software. However, what we need to note is when we hear Sage, we have different types of Sage softwares, right? And these Sage softwares are even, broken down by regions, right? There are some softwares that are peculiar to us here in Africa, right? And there are some state software that are peculiar to them in Europe. You can't use such software here in Africa because the legislation differs, the way it's been programmed differs. There are some of them. However, there are also some of Sage applications that are global applications. For instance, we have Sage 300 Cloud. It's a 300C. It's a global, Sage application. We have the Sage S3, which is the biggest. It's equally a global Sage application. So we have, of course, Sage 50. That is why you get to see that, oh, we have several kinds of Sage 50 out there. You have Sage 50 accounting, you have Sage 50 accounts, you have Sage Line 50, then you have Sage 50C, right? So the Sage 50 that is actually peculiar to us here is Sage 50C, right? We call it Sage 50 Cloud. It's formerly named Pastel Partner, right? So, but all those Sage 50 accounting, the normal Sage 50 accounting that you get to see out there or pitch to itself, those applications are actually for US legislation, right? Remember, I told you that the Sage 50 that is peculiar to us here is called Sage 50C. The C there refers to as cloud, right? So we have so I will walk us through some of those Sage applications that are peculiar to us here in Nigeria and Africa at large, right? We have Sage Business Cloud Accounting, we have Sage 50C, we have Sage 200 Evolution, we have Sage 300C, then we have Sage S3. So these are the respective, Sage applications that we have. So our training will be basically on Sage Business Cloud Accounting. But the beauty about all of this is this, right? All these softwares, right? The idea you have in one, you can always leverage on it on the other, right? If you are familiar with Sage and you are moving to an application like QuickBooks, right? It is much more easier for you. All you just need to do is probably there might just be a change in terminology. Sage might call its own invoice, right? And say QuickBooks or any other software might call their own, sales invoice. But you already have the idea. Oh, this is how, whenever we make a sale and want to recognize the revenue, all we need to do is to raise invoice. It's just the terminologies might just differ, in bits, but then the ideas, those softwares are being built, under the same premise, right? So the idea you have in one, you can always leverage on it in the other, and that is what differentiates you, who happens to be, a software accountant, compared to one who is still basically using the manual way of keeping their records, right? So now, State Business Cloud. Why State Business Cloud Accounting? State Business Cloud, of course, is one of the leading cloud solution in Africa, right? And it's specifically built for accountant business owners and lovers of the accounting profession. It has some benefits, right? So we specifically choose State Business Cloud Accounting, for this training. Reason being that it's a cloud software, and when you hear, someone say software is a cloud software, what it simply means is that you can actually access the software anywhere you are, right? There are some applications that they are majorly desktop application. Majority of these accounting software are classified into two, right? We have the desktop and we have the cloud solutions. Those desktop application, what they simply mean is that once you have them installed in a system, if you are not with that particular system or you are not within the premise of your office, you cannot have access to them, right? But a cloud solution on the other part, which a business cloud accounting belongs to, is accessible anywhere. All you just need is an internet connection, right? So, and we'll be walking us through how we can log in into the system. So from your phone, from your system, you can always have access to it. And now most organizations are moving to cloud solutions. Why? Simply because during the COVID era, there are so many of them could not even work. They couldn't have access to their accounting system because majority of firms were using desktop applications then. So now majority of them are now moving into cloud solutions, so that anywhere the MD is or the chairman of the company is, he can easily go into the system and just generate reports, right? And which is a plus for you in learning, a cloud solution now. So they still work like a desktop solution. The only difference is that desktop solution would only be accessible within a certain premise, within a certain network. But then the cloud solution, would be accessible, anywhere you are in the whole wide world. So now another thing, I said it earlier that it's accessible anywhere, and another thing about say business class solution is it is actually affordable. It is cost effective, and it does quite a number of things you would expect those even much more robust solutions would do for us. So now, another thing we would want us to take away, from today's training, right, is we keep hearing accounting softwares, right? And in some cases, you will be hearing ERP systems. What are the difference? I want to just enlighten us before we dive into, the training, proper. So when you hear anybody say a system, is an accounting software and it's not an ERP, or if you hear anybody say that, have you used an ERP system before, so that you don't get lost. You could be in an interview, so you needed to show that you've attended, a software, an accounting software training, and you've been the difference has been known to you already. So we have different kinds of accounting software, right? And we have different types of ERP solutions. What are the difference, right? So it's as simple as an accounting software. It's will do the basic accounting activities of a company, and it's mostly being used by the finance department. For instance, if you have a software that all it can do is to do banking operations, you want to raise payments of expenses and the likes on the system, you want to recognize your payables, your receivables with respect to your customers, your reporting, your ledger reporting, you know, you an accounting software would easily do that, right? And remember, an accounting software is basically restricted to, or primarily restricted to, the finance department. But then an ERP system, on the other hand, is like the father, to the accounting software. So an ERP system accommodates majority of a business need, right? So, for instance, it helps you, keep track of your logistics. It helps you keep track of your supply chain, your warehousing. If you have several warehouses, in all areas of the world, an ERP system is flexible. It can be customized, or it can be set up or implemented to accommodate such. When it comes to robust, inventory management, an ERP system will do that for you. E-commerce, contact management, which is also called customer relationship management system. An ERP system will do that for you. So an ERP system is more like an handshake between all the departments in a firm. So let's say, for instance, you have, of course, the accounting department. They own, the software majorly, but then other departments like inventory, fixed assets, the HR department. So it simply means, for anything the HR as a department, for anything they are doing within the system, they are doing pay related activities, KPI and the likes, right? It still synchronizes into the same system. So everybody is logging into the same system, but then their functionalities, is different, right? So an HR person will do their payroll process, and at the end of the month, right, it will account, into the software. The system would recognize the GL entries, right? And an inventory person, if an inventory person should release an item or should raise a requisition, he's still resident within the same system, right? And you don't need organizations does not need to procure, different softwares. Just one software would accommodate all those, right? That is what an ERP system is: enterprise resource planning. So that is one key thing that you should note. So an accounting system is very, very cost effective. It's a little cost. Remember, he's only doing just one portion, which is the accounting portion. You just want to raise invoices, raise expenses, know what your customers are owing you, what you are owing your suppliers and the likes. Right. Whereas an ERP system, you can go further to say, where are my fixed assets? What's the net book value of my fixed assets? What are those inventory items that we've transferred from one warehouse to another? What were the pay slips, for staff for this previous month? Let me seek the KPI history. Everybody, that is an ERP. That's what an ERP system is, right? And the third point here, it accommodates finance department operations and little of inventory, right? Which I have explained, right? And whereas an ERP system synergizes all department activities. So you have several departments using the same system. So you can imagine a company like MTN. They use an ERP system because they have several departments within, their firm, and they would love to manage all those activities with one system, right? And an ERP and an accounting software is limited in scope, which, it has limitation, right? Whereas an ERP system is very, very robust and accommodates, you can easily, customize it to suit, an organization's reporting. So that's one of those basic differences between an accounting system. And we have, examples of accounting systems. So examples are QuickBooks. The QuickBooks Desktop or QuickBooks Online is an accounting system, right? Then we have Sage Business Cloud Accounting, which is the one we will be training us on. Then we have Sage 50C, right? Just to mention, a few. Then some examples of ERP systems that we have Sage 200 Evolution, which is being tagged as a mini ERP. Is neither here nor there. Okay, let me see. I'm not sure if we can see my screen. Uh, oh, let me try to reshare. So please, if you have any concern, okay, there are some questions for me already. Sorry. Okay, so now I will just okay. So I was trying to explain to us that, okay, moment, just one moment, sorry. Okay, so now examples of, ERP system, just like I was saying, we have say 200 Evolution, which is it's neither here nor there. So we do target as a mini ERP system. right? Then we have stage 300 ERP, right? Which is formerly called ACC Pack, right? So we have stage S3. These are big and robust software. We have SAP, then we have Microsoft Dynamics, which is also being called Navision. So these are ERP systems, right? That organizations can actually go for, or that organizations currently use, right? So uh that's just the basic differences between an accounting system and an ERP system. So after the training, I would expect us to say, if anyone should likely ask you that have you used an accounting system before, right? You should be able to say something. And if someone is saying, have you used an ERP system before? Do you know what an ERP system is? Right? You can easily, let them know that an ERP system encompasses majority of those departments in a firm. It does your human resource, it does the inventory, it does the fixed assets, it does the procurement, logistics, customer relationship management, it does the sales, and so many others, right? The only thing is just that yes, everybody will log into the same system, but then the right, and access that they are being given will be different. We can't give an HR person access to all the ledgers, or to say an HR person will be posting invoices. No, right? So in an ERP system, they will be restricted. But whatsoever they are doing is synchronizing into just one system. So now that being said, if there are any questions, let me see. Uh, okay, if there are any questions, okay. So if there are any questions for me before I move ahead about the brief introduction I've just done, before we now move properly into logging in into the system and managing our company information. So if I can proceed, please just drop a chat if I can proceed. Okay. I don't know if okay, please confirm if I can proceed. You can just drop a chat or raise your hand. Okay. Thank you. Thank you for that. Good. All right. So yeah, would share the slide with us. No problem. We'll share the slide with us alongside the recording of the session. Right. So we'll move quickly into how do we access the system, right? Which is the Business Cloud Accounting. How do we maintain our company information? How can we log in, maintain our company information? Then we now proceed to creating master file records. So to log in into the system, right? All you just need to do is to go to all you just need is a browser, and a working internet. So either from your phone or from your system, just launch a browser like Chrome or Safari, right? Just go to accounting.stage1.co.za, right? So it takes you to the login screen directly. So accounting.sage1, right, .co.za. It takes you to the login page, just like I have it. Let me zoom my screen so you can see my screen clearly. So it takes you here, and this, of course, is the login uh, page of the software, right? So you would enter here your username, then of course your password, which you've created, earlier. So then the next thing you do is to click on login. Okay. So now I'm logged in into the system, and this is a Business Cloud Accounting, right? So I'll be walking us through, just a brief introduction to introduce us to the software before we now dive in deeply, into the respective, parts. So now this is Sage Business Cloud Accounting, and it has here, of course, we have here the work area, which is what we are seeing, the workspace, as it's being called, right? Then we have here the modules. These are the modules, or you call them tabs, that the system has. So let me zoom in a bit. So we have the home, we have quick view, we have customers, suppliers module, we have items module, We have the banking module, accounts. We have accountants area. Then we have the report module. Then of course the company module where we have access to do one or two super users kind of thing. Then we have of course the administration. So administration is whosoever that is an admin within a firm would have access to the administration. So these are the respective modules, or you can call them tabs. And below here is the workspace, right? So now, one of those things that is that makes navigation very easy anytime you find yourself in any software is this. Now, in this software, you notice that from the customer module, I have components. It has components. So if I go to customers, you see list, transactions, reports, then you have special and the likes. Right. Same thing if you go to suppliers, if you check out what that module entails, it has list, transactions, and it has reports. So you see that this list, transactions, and reports is peculiar to individual modules, right? And what it simply means is that lists, should you need to create a new record, right? Or should you need to check your existing records that you have in the system, be it customer list, suppliers list, items, the list of your banks, the list of your ledgers, you can always do that on that list, right? But then, should you want to do transactions, as the case may be, we'll go to the transactions tab, and of course, we'll go to report tab for reports. So this is also applicable to several other softwares too. So for instance, if you log in, if you are making use of Sage 50, you see it has maintain transactions, it has inquiries, and it has reports, right? If you move to an application like say 200 Evolution, it also has maintain transaction inquiries, it has maintenance rather, transactions, inquiries, and it has reports. So, but we'll still be diving into all of this, in detail. So another thing we need to note that would make this much more easier. Let me introduce us to the modules, right? So from the home module, what we have there is basically the dashboard, right? So the system has what we call dashboard. So if you go to a certain dashboard, for instance, you can easily see an overview. It's a summary overview of how your business is performing or how the company is performing. From the banking, now we don't have much data here. By the time we start populating data, we'll come back to this dashboard and you see how beautiful it can be, right? You see sales history, we have top customers by sales, and the likes, right? So now the home, have access to several dashboards. However, these dashboards are summary dashboards. So if we go to customer dashboard, for instance, the system will give us, overview, an overall summary of how, our customers, how they are performing, right? So you see the customers' balances, you see, and this is for all customers, right? That is what you get to see under the home. So the home is you get to access all the dashboards, right? So, and moving on, if you go to the quick view, right? The quick view, is similar to what you have in home. So the only difference is that home would give you for all the records, like all customers at a go, that's what the system will give you. But then quick view would give you per customer, like it will give you, an overview of one record at a time. If what you want to check, is how a particular supplier is performing, just one supplier, then you go to quick view. It's just like a brief inquiry, into the supplier's model. But if you just want to inquire on the items, how your inventory items are performing, you go to your items quick view. The home and quick view are corollaries of each other, right? It's just that the home, encompasses all the informations, all those records with respect to customers, suppliers, and items. For instance, if I click on item dashboard, to just give me top purchased item, item values on hand, it will give me the top selling items. You just list out all those items, right? But then if I want to view specifically for an item, if I want to see the activity of just one item, I would need to make use of the quick view where I can select a certain item, right? And the system will give me the overview, the quantity on hand of such item, the quantity on demand, and I can see all the transactions that is being, raised on that item. So that's then we have the customer module for all activities relating to customers. Be it we are creating our customers, or we are doing transactions, we are raising quotations, performing invoices, customer receipts, within the system. And say we want to generate, any reports that has to do with our customers, we get to do it from the customers module. Then we have the suppliers module. Any activities or any information relating to our suppliers gets to be done there. So it's like our payable module, right? Then we have our items module where all our inventory items, be it our physical inventory items or our service item, as the case may be, or should you want to do item adjustments, maybe as a result of a stock taking exercise, we can always do that from the items module, right? Then we also have the banking module. So the banking module, this is where we get to do our bank related activities, payment of expenses, petty cash and the likes, or transfer from one bank to the other. We get to do that from the banking module here. We have accounts. Account module, this is the art of the software, right? This is where we get to structure our ledger chart of accounts, right? And I'll be walking us through that, in detail, briefly, right? Shortly, rather. I'll be walking us through that in detail. So if you want to do anything relating to your chart of accounts, you want to create a new ledger, you want to delete, you want to edit a ledger, you get to do it from the account module, right? Then we have accountant area, right? Accountant area, this is where we get to do some specific related transactions like journal entries. You get to pass journal entries, you get to do what we call recurring journals, and you get to do your, VAT returns also and the likes. Then you can generate several reports, management reports within the system, transactions reports, audit related reports, right? Then you have the report module. The report module encompasses all the reports you have in the system. Mind you, you have reports under customers. There are some reports that are peculiar to customers here. There are some reports that are peculiar to suppliers here from the suppliers module. But the report module here simply, houses all those reports. Like if you just want to generate a report on your suppliers and you don't want to do that from your suppliers module, you can easily do that from the report. So these reports encompass all the reports that every other module has, even from financial statements, which comprises of your statement of financial position, statement of comprehensive income, which is equally called profit or loss, trial balance and the likes. You get to generate it also from this report. And inventory related reports, you get to generate that from here too. So but then we have the company, module. The company module, this is where you get to do your company maintenance. You get to set some defaults, which we'll be doing together, within the system, So then of course the administration module, whosoever that is a super admin, right? You get to create users. You can have several users within the system, right? And you can give all these users their respective rights. If you have a retail business, for instance, or you work in a retail firm, and you have your front desk, your sales point and the likes, you can create, such user within the system and would limit the rights that they have access to, like control user access. So they only have access to the invoicing screen, right? And the likes. So the administration screen allows you to do that. And should you want to change your password, you are allowed to easily do that from the administration screen, right? So I'll be walking us through how we can maintain, our company information now. But then, if there is any, question for me or any area of concern, so you can go ahead to ask, right, before I proceed. Okay. I saw a question here saying, how about Tally ERP system, right? That's from Timothy. Okay, so Tally, right? Tally, you can always tag it as an accounting system to me, because Tally, unlike all other softwares like say 300 ERP, say just 3 or Navision, Tally does not. There are it has so many limitations, right? For Tally, so that's more reason why I personally would not tag it as an ERP system. Yeah, some would call it Tally ERP 9, but then in terms of functionality, for consultants like us, right? You I wouldn't tag Tally, as an ERP system, because it has so many limitations, especially, with the reporting structure, that we have today by which guideline is being given by IFRS. So Tally, it's not just it for me. Okay, so now we'll be looking at how can we set up our own system, right? Then I'll be walking us to, the chart of accounts. That area you don't want to miss it, most especially the chart of account aspect. It's something, all accountants, if you say that you've used the software, something you should know. You should know how to chart an account. You should know what a chart of account, what it refers to. And also for some of us that are also trying to like switch profession into the accounting profession, you need to understand that aspect of the system. So moment, let me this notification so we don't, just a minute. Okay. Why? Okay. So I want to disable getting some notifications. Just a moment. Okay, so back. All right. Okay, so please confirm if you can see my screen. So I can walk us through, now we've logged into the system, how do we create or how do we set up, our company? So we will be setting up our company together. I'll be walking us through. And if you have any question, as the case may be, right, you can always, bring my attention to it. Yes, the software can be used in a supermarket. Yeah, it can be used in a supermarket. We have some supermarket that make use of it, right? So yes. I saw a question saying difference between Sage 50 and Sage Business Cloud Accounting. Yes. Okay. So Sage 50 and Sage Business Cloud Accounting, they are both accounting softwares. However, one of the major difference is that, or I like two or more difference, right? So one of the difference between Sage 50, I would take Sage 50C, in this case. So one of the differences is Sage 50C, it's majorly a desktop application. But then you can get a cloud infrastructure for it, right? But it's primarily a desktop application. Simply means if you have it installed in a system, if I install it on this on my system here, and let's say tomorrow I'm not in Lagos and I'm not with my system, it simply means I can't work, right? Because it's a desktop application. I've only installed it on a particular system, right? Or let's say we installed it in our office, right? And it simply means once I'm not in the office, I can't have access to my Sage application, right? So that is what Sage 50 will do. But then Sage Business Cloud Accounting is a cloud solution. Simply means for you to have access, you need to, log into it using your internet or your system, or using your internet from your system or your mobile phone, right? So one is a desktop application, and the other is a cloud solution. And one of those other things that Sage 50 has, which is a limitation also, is that Sage 50 would only allow you, have two concurrent years, two financial years on the system. So it simply means now that we are in 2022, you'll be only allowed to have 2021 and 2022 financial year. Simply means when you want to go roll over to 2023, you have to, go and purge, transactions of 2021, the earliest year, right? It only allows for 2 years at a time. But then Sage Business Cloud Accounting would allow for unlimited number of years. 10 years down the line, 12 years down the line, you still have access to, all your respective data, right? So that's also another major difference. But it's still, they are still under the same, Sage company, right? But those are just few of those important aspects. So, and say 50C could do multi-store. Yes, could do multi-store, but Sage Business Cloud would not do multi-store. It only allows for what we call additional companies. So if you have 2 or more stores, we can always, use that additional company, method to bring it to life, right? But primarily, that's just another area on the part of Sage 50C, right? And Sage Business Cloud Accounting. So let me see if you have okay. Yeah, the particular website, I walked us through that. For you to log in, you just need to get your browser. From your browser, go to accounting.sage1.co.za, accounting.sage1.co.za, right? And you get to log in with your username and your password, right? And we shared, if you look at your mail, we have a sign up guide that we've sent to us. I'm sure some of us have signed up already. So, but if you haven't, after today's session, you can still do that, and in preparation for tomorrow's class, right? So another critical accounting software that is out there today that is doing wonderfully well, which I forgot to mention earlier, is Zoho, right? We have Zoho application. You can see we are using one of their this thing, which is Zoho Meeting, for this particular training. So we have Zoho Books, we have Zoho Inventory. These are, robust and fantastic applications too that belongs to that accounting software category. So it's a cloud solution, just like this is business cloud accounting. But then it has, 1 or 2 advanced features, that you stand to enjoy, even more than Sage. But I forgot that earlier. But it's just Zoho Books is one of those, right? Zoho is spelled ZOHO, right? Is another accounting application that you can always, rely on. Okay, so all right. So I will just move ahead. So now let's set up our company. So mind you, I won't be using accounting jargon and all. We'll be taking them together just as if we don't even, some of us here are not even accountants, right? So, and that's in that aspect, it stands to be much more interesting. Okay, so now to set up your company, right, we need to go to the company tab, right? And from the company tab, we have what we call change company settings. So change company settings, that is where you get to do the overall setup, right? Which I'm working on through now. So you'll be setting up things relating to your company information, your company name, your company address, your financial years or your accounting period, as the case may be, right? So you would also be setting up your logo, your company logo. You'll be adding your company logo to your software so that anytime you raise invoices or you want to raise customer receipts, right, the logo, will be shown on it, right? And we'll be setting VAT settings as well. What's the VAT percentage? Is our service or our products that we sell, is it vatable or not? We'll be working us through all of those in the company settings. So should you want to set up your company in State Business Cloud Accounting, all you need to do is to go to the companies tab or the company module, right? Then you go to change company settings. So now on this screen, you have several sections. You have company details. Let me zoom it one bit. So you have company details, general settings, VAT settings, document and statement, branding, user defined fields, email signatures, then you have multi-currency, right? So Now, the primary thing we would be looking at firstly is company settings. What do we need to do in company settings, right? So, company details rather. So, in company details, we still have several subcomponents, but we'll be taking the company details first. So the company name. This is where you get to specify your company name, right? For the purpose of this training, I personally used Training Company Limited, right? In your own case, it could be different. It could be your cake business name. It could be your name. Anything at all. You could use it as a company name. It simply means when you are doing transaction and you are generating reports, that is what you get to see. On your source document, right, and your report. So, and let's say tomorrow, right, you choose to change your company name. Let's say currently Training Company Limited. Tomorrow we want to name it as this Nigeria Limited. I can easily come back here and edit, this company name section. Whoever name that I impute in this, and I click on save, automatically the system would inherit even past transactions, right, will be in this new company's name, right? And so company name, Training Company Limited, in your case might be different. Telephone number, you get to specify a telephone number, but these are informations relating to your own company, to your own company. So you have mobile. Mobile is similar to telephone. If you have any other phone number, you can, specify it there, right? So then, of course, you have the company's address. You would want to include your company's address so that when you raise customers' invoices or customer receipt within the system, your postal address would always get shown, and your physical address. And just like company name, should your address change tomorrow, let's say you change location, all you just need to do is just to come back here and modify it, right? And when you do, you click on save, right? So I am using all data we have here that I'm specifying here are just sample data. They are just random data, right? So they are not real data as the case may be. So I purposely use Allison Street Ikeja, right? I can copy same to be my physical address. Okay. So I'll do just that, right? And with that, I've been able to impute or modify, or as the case may be, update my company information, right? Then we have additional company information here. So additional company information, is you use it to record your company statutory information. Should you want to keep information regarding your company's team number, you can always specify it here, right? But it's not compulsory, right? If you have your company's registered name, right, you can always impute it in there. In some cases, some organizations business name is different from their trading name. Their registered name is different from their trading name. So whichsoever, if you have that in your scenario, you can always specify that here. So what you have in company name will be your trading name, then your registered name with the CAC will be here as your registered name, right? So, but in some cases, if it's the same, then you can always, specify them together. Okay. So please confirm. Please, you can confirm via chat if you can hear me. If I can, so that I can proceed. Just to be sure we all are together. Please, you can just confirm via chat if you can hear me, and if you can see my screen, so that just to be sure we all are together, please. Okay. Okay. All right. Thank you for that, Abiola. Okay. So registration number, if you have your CAC, information, you can also specify it in your registration number, right? And but remember, it's not compulsory. This section of it, this additional company information, is not compulsory at all. But if you want to have it for record purpose, and that's one of the essence of having a system, you need to update, or you need to keep information as much as you can, so that if you need any information tomorrow, you don't need to crack your brain. Just log into your software and you have it, right? So province, country, Nigeria, right? So entity type. Is it a limited liability company? Is it a partnership company? Is it a sole proprietorship company, or a trust? So I will just specify limited liability company, right? So there is another beautiful thing that this software has, right? And it's called customer zone, right? Now, what does this customer zone entail? Why is it so beautiful, right? So, customer zone, right, is just like a customer portal. We have so many clients that do request us for this specifically, right? Imagine you having a system where your customers can easily log in, right, into to see their customer statement, see their account history, to see if there's any invoices that are due for payment. So you don't even need to disturb yourself too much with some unnecessary sending some emails, sending some revised invoices, and all those things. The customers will tell you, "Yeah, I didn't get your invoice for last month. Can you resend?" So they can always log in from their portal. And that is what we call customer zone, right? So customer zone, you can always activate it. You can always enable it from this customer zone section, right? It simply means when we enable it here, as we have it ticked, right? It simply means when we enable it here, what do we want our customers to be able to see? Do we want them to see invoices and quote only, or do we want them to see invoices and account history? So we normally advise you set it to invoices and account history, right? So that they are not just seeing invoices, they are equally seeing their statement, their customer statement. Are they owing you any money? When last did they pay? They will be able to see all of this information, right? So you can always set it to invoices and account history. So customer zone again is just like customer portal, right? Once you enable it, it allows your customers. By the time we create customers, and we add their email address, to those customer information, then the systems would simply send them a URL that is specifically for them. So anytime they access that URL, they are seeing their account history, right? They are seeing how much they need to pay. And if you have 1,000 customers, they have access to it, right? So we'll be seeing how it works, right? So, but then always remember, it's always good to set it to invoices and account history. Simply means they're not just saying invoices and quotes alone, they're also saying their account history, which is their statement in this case. So, what do you want to have as the display name? So, when they log in into their customer portal, what should they be seeing? So, in most cases, they should be seeing your company name, which is fine, right? And which is what I have here. But if you want the name to be slightly different, you can always specify the name you want, here, right? So this I'm just walking us through how we can set up our company after we must have signed up, right? So uh the other aspect in terms of, because the truth is you need to be able to set up a company before you are able to do transactions, before you are able to create customers, before you are able to say, oh, we are creating items, what are the modalities, or before you even create a ledger chart of accounts, right? So that is what we are just walking us through here. And by the time we complete this setup, because this area is very, very critical, then we can now proceed to do all our respective transactions, right? So I would move, from from the company's detail tab to the general settings tab. And one key area which I love, within the software is the financial years. Now, what is a financial year? Right? So it's very wrong of you to be an accounting student or to be one that uses a software to manage your company or your business, then you don't know what a financial year is. It's not only peculiar to accountants, right? So a financial year or accounting period, as you can see, the system allows for unlimited. We can create more, and I'll walk us through that. But a financial year, right, simply refers to those reporting years you want to maintain from your system. Now you can see that my first financial year is starting from January, till December 2021. Right. And one of the key thing about financial year is being broken down into months. So 12 months would make one financial year. And your financial year might be running from January to December. It could be from February 2021 to January 2022, right? Or it could be from March, 2021 till February. Once you just need to count, 12 months from the start year, right? And if your financial year is ending in a particular date, the next one will start the day after, right? So your financial, I repeat, now we have 2021 as a financial year, and our financial year is starting from January to December. Now we can see that we have 2020. Simply means, yeah, we can post transactions or we can enter any record as far as 2021, right? And we can also enter accounting records as far as 2022. But let's imagine a scenario where we don't even have 2022 created in the system. If you only have 2021 financial year, it simply means that we won't be able to do 2022 transaction. So if you are in a situation like that and you are trying to post a transaction and the system is telling you, oh, invalid financial year, and the likes, right? It simply means you need to go and create your financial year, right? It is your financial year that controls, the period that you are able to post your respective transactions. So, and for those that are accountants, they understand, these aspects, right? And if there is, now we have 2022, let's now create for 2022. We can click on the add new line. You can see the plus button. We have 2022. Let's say we are in December 2022 now, and we want to create for January 2023. Because if we don't make provision for 2023, no user will be able to do anything, be it sales, be it suppliers invoices, be it to even raise petty cash vouchers, for expenses. You won't be able to do it if you don't create 2023 financial year. So to create 2023, I'll click on that, right? So it simply means I'm allowed to do 2021, 2023 transaction, and and so on, provided I've created them, right? But to just remind us again, your financial year does not mean that because it's 12 calendar months, it should now be from January to December majorly. No. There are some companies, their financial year, falls between the line. Some is starting in October, it will start in October 1 year and it will end in September, the following year. Do you understand? So if, let's say, let me make provision for that, for instance. Let's say our financial year is starting in April, and is ending in March. So it simply means for 2021, I will set my financial year to say, okay, April, right? 2021. Okay. So April 2021. Then, of course, it will end because it must be 12 calendar year, right? So it will end in March, the following year. So this will then be, so it will end in March 2022. Then if I want to create a new year, right, it simply means if I click on add, the system would follow that pattern. Simply means the next financial year will start in January, in on the 1st of April 2022, and it will end in 31st of March 2023. It just needs to complete, the 12-month cycle. So, and I don't know if you understand that. So remember, if you do not make provision for your financial year, you won't be able to post a transaction into it, right? So, but then for the purpose of the training, I will just take as, to be January to December. So I'll just go one step back. I can easily say this is starting on 2021, and is ending 31/12/2021. So that, right? So we have 2021 and 2022 there, right? So having said that, another beautiful feature here that you need to take note of or you need to know, which is based on standard practice, is what we call lockdown date. So lockdown date, what it does is it allows you to close your books, on a monthly basis, on a daily basis, or weekly basis. What do I mean by that? Now you are in charge of reporting. You are an accountant. You have several users within the system. Standard practice, and you could be asked during interviews too. Standard practice is that whenever your company is done with a transaction for a month, you close your books. You lock the period such that no one will be able to post into that period. Now, what do I mean? Now we are in September, September 10th. So it is expected that, let's say in our firm, right, we can have a policy to say every 10th, by 10th of the following month, you must have complete, the postings for the last period, right? So it simply means by this time you must have concluded that of August transaction, right? So, and for us to have done that, once it's just 10th, all I just need to come here, set lockdown date, right? And what do I need to do? So I'll just need to install the system to say close our books, for 2022, right? For the month of August. So it simply means, what I have here, it simply means that no one will be able to do transaction, right? No one will be able to do transaction for up until August again. So it simply means the only period the system would allow would be September, right? And October and the likes, right? So to allow you close your books, and if it's a weekly basis, all you just need to do is to specify the period, right? Let's say, if it's if ours is a weekly closage of our books, we just need to say, oh, we've closed our books for as our last week, right? And of course, uh simply the system would allow for transactions from fourth to this present date. Do you understand? And if you close your books on a daily, all you just need to do is to come to your company settings under your financial year. Then you just set your lockdown date to be, if you select yesterday, right? It simply means no transaction will be allowed into the system, up until yesterday. If you want to post anytime, you do 9 9, then the system would not allow it, and it keeps you, in safe hands, you as the accountant, and it helps you to limit errors so that no one would be able to log into the system tomorrow and do some wrong postings. And you can't write that off. Someone could want to do a transaction into 2022, and let's say when they are specifying the date, they selected 2021 by mistake, right? But if you didn't close your books, for 2021, from the lockdown date, simply means the system would allow it, and you might not even know up until you are generating, your financial statements, at the end of the year. That may be when you find out, right? So it's always good, by standard practice, that you close your period. It could now be on a monthly basis, right, or on a weekly basis, on a daily basis. So whichever works for you. So that's what lockdown dates, indicates. So, but for the purpose of this training, I would uncheck it, right? It simply means I'll be allowed to do transactions up until 2021, then that of 2022. But that's what financial year, right? Okay, that's what financial year really entails. So I need you to further confirm if you can hear me so that we can proceed. And if you can still see my screen, please, you can just confirm via chat. Okay. Okay. All right. Thank you. Thank you, Aishat. Thank you, Elizabeth. Thank you, Olatunde. All right. So that's financial year, right? So we understand opportunities from what financial year means and how important it is, right, to us. Be it a business person, right, and be or an accountant. So if you're a business person, someone could easily tell you that, oh, your books for your last year is not good. You can ask, oh, which of the financial year, which of the financial year are we talking about, right? So that's just that. Then, of course, rounding. Rounding simply means, do you deal with, let's say, do you deal with old numbers to say, oh, so if there's any customer figure or any invoice figure that is 20,000, 56 kobo, always round it. If you have such policy, you can always use, rounding to do that. But in this case, we would not do such, because if a customer is owing us 20,000, 50 kobo, we want it to show, as 20,000 50 kobo within the system, right? So, but that's what rounding will do for you. So rounding would always, the system would always help you round up or round down. So you can always say round up to the nearest 100, round up to the nearest, but that's just what that, is for. But we'll move on to, another critical part, which is very, very important, which is regional settings. What is regional settings in this case? Regional settings, right, is saying that, quantity decimal places, when we have inventory items, right? Our inventory items, do we sell them in whole numbers, or do we have them in decimals, right? For instance, if you are selling, computer accessories, gadget and the likes, right? You can't say you sell 1.5 computers, right? No, you would always sell one piece, two pieces of laptops and the likes. So it simply means you don't have any quantity. Unlike someone who is filling gas. So you want to say if someone is buying 3.3 kg, and the likes. So if your item quantity is in decimal, you can specify it here, right? And also your value decimal places. So your value decimal places would always be in two. Why? Simply because we are working to the nearest kobo. So we don't have 20,556. No, no, no. So if you have 20,000, you have 20,000. Then your kobo would always be two decimal, right? So that is why our value decimal place would always be two. Our currency symbol is naira, which is being represented by hen. Then our date format, date, month, year. Whichever works for you. Some people prefer month, day, year, but I personally always prefer day, month, year, right? So you can always specify that. So that's what regional settings tends to mean. That's what we get to do there. So the primary things we get to do is to specify our quantity decimal places. If the items that you sell or the service you render is always in units or in pieces, then it should be zero, right? So it simply means we don't deal with decimal. But if let's say you sell flour, you weigh them, some of those things like that. If you do anything that has to do with weight, that and you sell in piecemeal, you always need to specify your quantity decimal places here. So that decimal place is four. They do 5.2167, and they want the system to accommodate such. If you're in that situation, you just specify it to be four, right? So that the system would allow such for you. So, but then I wouldn't want to bog us much, right? But let me just look at some of those peculiar, checkbox, that we always need to look out for, so that we don't boggle us with so many unwanted information, because we still have much more things to look at. So, displaying active customer for selection or report here. So, I always advise that we do not display inactive customers for selection when processing, simply because whenever we have a customer and we set it to say, oh, this customer information is currently inactive, whenever we are doing transaction, I don't want the system to always disturb me with such information. But when it comes to reports, I should be able to still generate report on them in respect to their past activities, but I don't always. So one when duplicate reference is used on customer invoice, yes. So one when duplicate supply invoice number is used, yes. I want that too. So use inclusive processing, no. Use counters. So I think these are just the two primary things that we can have under customer and supplier settings, right? Our item settings, do not allow items below zero. Yes, of course. We don't want to allow negative quantity. So we are doing a default. So we are setting defaults, that would always work with. And so that by the time we start doing all those activities now, they will be in good order. So one when item selling price is below zero, yes. Okay. Display native item border for selection, no. Display native. So this is fine, right? So one when item cost is zero, yes. Okay. So yeah, the system allows us to create multiple price lists, right? If we want to, let's say we want to have a different price list, wholesale, retail, price list. The system allows you to have such, and your price list could be anything, not just wholesale and retail. But we'll see how that works, as we proceed. So we want the system to run our aging, based on invoice date. Do we want, so here outstanding balance? The system is saying once we generate customer statements, any amount that the customer is owing us, which will be tagged as aging, how do we want the system to always calculate it? Because there are some firms that have what we call credit control policy. They want to be able to see, how much customers are owing them, how much of those money is within 30 days, how much is within 60 days, so that you can know, why is this person owing us for more than 1 year, owing us this amount. You want the system to do that accurately for you. So you can now specify to say you want the system to run the aging. Is it based on invoice or based on due date? But we'll see how this works, right? But we can just set it to be invoice date. So aside from that, the only thing we just need to still select personal information retention period. So always set it to 10 years. This is just a kind of record keeping. You understand? this doesn't mean that once we get to 10 years, with our software, the system will not keep information. No, but it's just SAGE just want to know, with respect to our legislation, how many financial year data does your tax authority want you to keep? It's just like a record keeping thing here. So we just specify 10 years, by default. It's just a kind of feedback to SAGE, right? It doesn't affect your information. But I think in Nigeria, I think our retention period is mostly 5 years, right? If I'm not mistaken, 5 years, yeah. But just set that to be 10 years. And of course, VAT settings. So now, VAT is always an integral part, of companies' day-to-day, activities. Like there are some companies, they deal with VATable goods and services, and there are some they don't. So if your company, or if you deal with VATable goods, so your VAT system should always be on invoice based, right? So do not select payment based. What's the difference between this? There are some legislation that make use of payment based, like the UAE and the like, right? It simply means they only recognize VAT once payment is being made, right? But for us in Nigeria, is either you are dealing with VATable goods or not. So if you are dealing with VATable goods, you select invoice based, right? But if you are not dealing with VAT at all, let's say you are an hospital, so you have an hospital establishment, so where they don't deal with VAT, they don't charge VAT, people don't charge them VAT, right? Or let's say you're an NGO, you don't deal with VAT whatsoever, can always select your default to be no VAT, right? And the system would not keep any information, as regards, VAT for you. But if you deal with VAT, right, you always select invoice based. Simply means VAT input and VAT output would only be recognized, right, when you raise an invoice within the system. So it simply means it is only when you buy that is when you get to recognize VAT, right? And also when you sell, that is when you get to also recognize VAT output. So VAT is value added tax for some of us that do not that are not familiar with that particular term. So it's a tax, it's a form of tax that has been levied, of course, on goods and services. So it is just like what you call sales goods tax. So when you buy and when you sell, you are being charged VAT. That is if what you are buying is VATable. So you can always read more or learn more on VAT, anyways. But then our VAT percentage by default is 7.5. Let's say tomorrow, the federal government choose to change our VAT percentage to say 10%, or they want to take it back to the previous 5%. You can always come here to modify this, right? So standard rate simply means what's your standard VAT percentage, and it will be 7.5, right? Then you have here your VAT number. You can always specify your VAT number if you have, if you've registered for VAT, right? And you can always select your VAT period end date and submission due date. But in this case, what I'm selecting here is that my VAT is invoice based, right? And our VAT rate is 7.5%, right? So that is this with respect to the VAT settings. So lastly, what I will show us here is our company logo. How do we get to add our company logos into the system? Yes, so that anytime you generate your invoice, your invoice, your payment, and the likes, right? And you would want your company logo to form part of it, right? So this is where you can always upload your company logo, from your branding section, company logo, just select file, right? Then you go to your location, right, where you have the file. Then you can always specify your company logo, right? So if you do that, and you can always preview, how it will look like, at the end of the day. This is, a sample of how, our source document will look like, at the end of the day. So having done that, all I want to do is to click on save, right? Then I'm done with setting up my system, right? So remember what we just did here in setting up our system, is we specified our company information, or we updated our company information, as the case may be. right? Then we went to our additional company information to further, you know, specify company's information, right? Then we went to general settings to specify our financial years and the likes. I explained to us what financial year means, right? And we get to set our regional settings also, right? And I explained to us what our regional settings mean also. Uh, Item settings, we looked at one or two check boxes here. Then we also looked at price list because the system allows you to have, two or more price lists within the system. Then we looked at VAT settings and we looked at, how we can add our company logo. So that's just basically how we get to like maintain our company information, but you ask yourself, why do we have to take it to all of this? We just want you to understand, software is not about rocket science. It's about whatsoever your consultant or you yourself have set up. That is what defines how your system would report, right? Now, all we have just done is just setting up company. If we've looked at how we can sign up, which was sent to our email. We've looked at how we can log in. Then we've looked at setting up our company, which we've just done. So let's now move, into those critical areas that concerns us, and this is where the training gets, much more interesting, right? And it will lead us to what we call the accounts section of the software. Please, I need us to pay attention, to these aspects. If nothing at all, this is one critical aspect we'll be glad, we are taking on with us, right? So we are looking at accounts, and what do we get to do in accounts? That is where we get to set our chart of accounts. So majority of us, or some of us, might have been hearing chart of accounts, ledger accounts, GL, general ledger. What does it mean? And how do we uh how do we chart our accounts, and for us to help us with that, I'll walk us through a small slide, right? So that by the time we come back to the software proper, we would understand, we would understand, we would have gotten what a chart of account is, right? So now, how do we chart an account? What is a chart of accounts, right? Chart of accounts is also being, you can be interchanged as general ledger, right? And of course, what is the general ledger? The general ledger, right, is mostly referred to as the heart of the accounting softwares, right? This is because its configuration determines how the reporting of an entity is being structured, statutorily and management-wise, right? What do we mean by that? Now, you see, the only thing when it comes to software that differentiates a manufacturing company to that of a construction company or to a company that is in retail business, right? Or name it, any industry at all, aviation and the likes, is what is the chart of account. Yes, they will use the same application, or in most cases, they can use the same application. They can say they are both using Sage 50, but something will be different. And that is what you need to note. What that particular thing that will be different is a chart of accounts. It's how their accounts are being structured. For instance, if I want to know the industry a firm belongs to, if I look at their chart of account and I see their revenue, their revenue lines to say, okay, where are they making their money from? Now I'm seeing sales of tickets, I'm seeing advice, travel advice, and some of those things like that. I could easily know, oh, this is an aviation company. And if I see their cost, I'm seeing their expense and cost ledgers. I'm seeing their cost ledgers to say, oh, this line is repairs of, aircraft and all. So I could easily know. I need not be told that it's an aviation company. But if you see a firm where you are seeing raw materials, you are seeing work in progress in their ledger account, you can easily tell that it's a manufacturing firm, right? And it goes on and on and on. But then, there are several components of a general ledger account that we need to note. We have the chart of accounts, we have budget, we have cash book, right? But the general ledger is just the broad term, But the chart of accounts in this case is a listing of the names of the accounts, that the company has identified and made available for recording their transactions in their general ledger, right? But a company has the flexibility, or an accountant has the flexibility to tailor the chart of accounts, as it suits them. Should you need to create a new ledger account, you can always do that, right? So a chart of account, in this case, is like a pool, right, of your ledger accounts. So you have several ledger accounts. What is a ledger account? A ledger account is a ledger, right, or is an account that is being created, to be able to like record and trace activities that belongs to that segment. Like, it simply means everything you are doing in an accounting system flows into your general ledger in terms of reporting. If you say you want to raise an expense, let's say you give out money, to buy fuel, or meal, for visitors and the likes, and you want to record that, mind you, you are recording it to a ledger account, right? So a ledger account would say, so by the time you are looking at your chart of account and you have what we call transportation expense or fueling expense, you can easily, the system would help you sum up all those money that you've been posting or you've been spending in terms of transportation to the transportation ledger. The transportation ledger, that transportation expense is a ledger account in this case, right? And so on. If you buy a computer equipment today, you want to record it in your account to say we bought a computer system. That activity is going into a ledger. That ledger, you could call it computer equipment at cost. That computer equipment at cost is a ledger account. But all of this ledger account put together would form your chart of accounts. So it's like how all your accounts is being structured, right? And I stated here that the chart of account would give anyone who is looking at it a rough idea of the nature of the business, by listing all the accounts involved in your company's day-to-day operation. But the characteristics of a chart of account or a ledger account would include, they have code, they have description, and they have what we call accounts categories, right? I don't know if we are following, if we all are getting what I'm saying. For instance, if I come back to the software and I come to list of accounts, you see there are several accounts here. Sales, cost of sales, we have expenses. So let's say when you advertise, you post it to a ledger. When you pay for electricity and water, you post it to a ledger account. You understand? That is what a ledger chart of accounts refers to. Yes, we'll be going on a break, but not now. We'll be going on a break, say by 2 p.m. So we'll just go on short break, right? So that we can just relax. And for some of us that want to pray too, we can actually do that. Okay, so to just go back, right? Now we have types of general ledger accounts. Those general ledger accounts, or when you hear someone say, "Oh, this is a chart of account," it would always be categorized in two ways. Or you understand, like we have what we call income statement accounts, and we have what we call balance sheet accounts, right? So when you want to create a ledger account, and when you are being told this is a ledger account, you need to ascertain, is it an income statement account or is it a balance sheet account? Now, what is the difference? For some of us that are accountants, I'm sure we are familiar with a couple of these, right? But for some of us that are not accountants, the difference is pretty simple, right? When you say an account is an income statement account, it simply means you would only find that such ledger, right, in your income statement. If you want to know your profit or your loss within a period, those ledger account or those line items that you will see, are those accounts that are being created as an income statement account, right? So, and one peculiar thing is that the balances in this ledger would not roll over into another financial year. So you remember I walked us through, what a financial year is the other time. So let's say when we are done with our 2022, data, our 2022 transactions, the system would not, the balance. Let's say we have an expense like say transportation expense, and we spent, let's say 300,000 naira, on transportation within 2022 financial year. The moment we are posting record or we are generating report for January 2023, you know, as at January 1st, the balance in that ledger would be zero because it's an income statement account. So just like what we have here, so this ledger account only appear on the income statement report so as to get the profit for the year, right? Balances in these ledgers would not roll over into another period, like into another financial year, right? Then the opposite, which is the balance sheet account. Balance sheet account will appear on your statement of financial position, right? So these accounts, it's not, they don't measure your profit or loss and the likes, but for instance, like your assets, your bank account balances, for instance, let's say as at December 2022, if you have, 5 million in your bank account, if you are going to January 2023, what you still have is still 5 million if you didn't spend or if there are no charges, deducted from the account. Do you understand? It's a balance sheet account, unlike an expense. So it simply means there would always be balances that will be rolling over from one accounting year or financial year to the other. So when you are being asked, so if someone is asking, what can you say, about an accounting system? So you know that an accounting system has what we call chart of account, which is the most important aspect of it, right? So and the chart of account is being segregated into two. It's you have income statement accounts and you have balance sheet accounts. What are the difference? Income statement accounts would only appear in your income statement. So the system would only use those set of ledger accounts to ascertain your profit or your loss, for the year, and the balances will not roll over into a new financial year. But then your balance sheet accounts, these accounts would, the system would always, you would always find them in your balance sheet reports, right? Such as your bank balance, your inventory balances, your assets, your liability. Say you are owing, if you are owing your suppliers, be it if you are going to next year, the system will still recognize it as you are still owing. So the system, so because they are balance sheet, element, and their balances would always roll over into new financial year, right? So now, what when you want to create a ledger account, what is it that you need to note? So characteristics of a ledger account would always be that it will have a code in some cases, then it will have ledger description, and of course ledger category, right? So the code refers to the unique numeric codes and alphanumeric, in some cases, assigned to individual ledger accounts so as to make it different, to other ledgers. Now, we've known what individual ledger account is. Anything you are posting, be it, payroll activities, be it that you receive some stock, whichever case, they have accounting implications, they have accounting entries, right? And each of those accounting entries is going to an accounting ledger. So it's not rocket science. You understand? So now, and each of these ledgers, would have what we call code in some cases, in some softwares, and it will have description, and of course category, right? And this is what a typical chart of account looks like, right? What I've been explaining all this while, this is what it looks like, right? Now, if you want to create a ledger chart of account, however, there are some tips, we'll share the slide with us, right? We'll share the slide with us. But if you want to create a typical ledger chart of accounts, this is what you should note, right? We have what we call GL code, just like I mentioned, we have description, we have account category. Then, of course, we have the type, which I have explained here in terms of balance sheet or income statement. Now, you can see here that our balance sheet account, is being treated first. Then we have income statement, following suit. So our balance sheet account, you see that it's starting from code 10,000, right? So it simply means, and here you see that 10,000 for our non-current assets, which is fixed assets in this case, you can see that our code is starting from 1,000, like anything 10,000. So now this is the cost ledger, I'm having a ledger for accumulated depreciation so that when I own depreciation, the system would always post into this accumulated depreciation ledger, right? So if I want to create a new one, say building, right, land and building, or say I want to create computer equipment, simply means and the code must be uniform. Now this is an increment of 10. So if I want to create a new ledger account for computer equipment, then that will be 120, right? So that is 10,020, if so, and if you want to create for accumulated deposit, that will be 130, and it will go on and on and on. Then if the ledger chart of account you are trying to create is receivable in nature, you can see that receivable is starting from 12,000, right? Our bank is starting from 13,000, right? So we have two banks here. We have GT Bank, we have Petty Cash as 13,010. So if we want to create a new bank, say for Access, we operate Access Bank. I want to create Access Bank. So Access Bank could be 13020. Do you understand? Because it must be uniform. So when you are creating a ledger chart of account, you need to ascertain which category does the ledger account belongs to. Is it an asset account? Is it an expense, account? You understand? Is it a liability account or is it a bank or cash account? We need to ascertain. So that is what we give you clue of the code you need to assign to it. So it is the category that ascertains the code you need to assign, right? But this is just an example of what a chart of account is like. So you can be asked even in interviews, you can be asked to say, can you chart an account? It's very, very simple. All you just need to do is to just make two provisions, balance sheet and income statement. So what are the categories that I have in my balance sheet? List them out. Then give them codes. So I already know that my balance sheet account is taking that code from 1,000 to 3,000, right? Then my income statement would always take from 4,000 to 9,000. You understand? But for my balance sheet that is between that 1,000, to 3,000, this is what I want to give my non-current assets, which is fixed assets. This is what I want to give my receivable. This is what I want to give my, bank or cash. This is what I want to give my prepayment. This is what I want to give, in terms of liability now. This is what I want to give my accruals and the likes. So you can have them like that, right? But this is what a chart of account looks like. And this is very, very important in an accounting system or an ERP system, right? This is very, very important because this is what, for instance, if you have a revenue ledger and you mistakenly create it as an expense, then your reporting would not be right. So for every good accounting system, right, there would have been a good chart of accounts that has been designed, be it on the part of the consultant, which is some of those things that we do, or on the part of the users. And users can always add new ledger accounts. Remember, the essence of a ledger account is just to accommodate activities, related activities that you carry out in your business, so that at the end of the day the system would give you a summary report or detailed report on it. Let's say I want to track all expenses that we are spending on printer. I can create repair and maintenance as a ledger account. So it simply means any money, and we'll see how we'll post that. Any money that we are spending with respect to that, we would always, with respect to printers, we would always go to repair and maintenance. Repair and maintenance is a ledger account, right? Repair and maintenance for printer is a ledger account, and it goes on and on. And we have your tips that you can always, make use of to create a ledger account. That you should divide the ledger account into part, balance sheet and income statement, establish the ledger categories, just like what I mentioned, revenue, expenses, and the likes. Then I assign GL codes to them based on the categories, right? And ensure the codes are uniform. If your codes are in increment of 10, make it 10. Some their codes are uniform in increment of 1. Some their codes are uniform in increment of 50. So if you create a ledger that is saying 1,050, then the next one will be 1,100, and the next one will be 1,150. There are some. So it depends, and it goes on and on, right? So I don't know if there's any question. I would okay, there's a question here from Oluchi saying, does that mean profit ascertained from the income statement account will not be brought forward to the next accounting period? So the way it works is this: the profit you ascertained, within a financial year, by the time you move to the next year, in terms of all those individual income statement ledger, they would have been written off to zero. But then that profit or loss for the year would have been taken to your retained earnings by the software. So your profit or loss for the year, as at December, last day of December 2021, for instance, by the time you move to 1st of January 2022, you know, you'll be seeing it in your retained earnings. You won't be seeing any of those individual ledgers, balances again. They would now be in zero, more or less like they are fresh, right? But their balances would have been taken to the retained earnings. So always note your profit or loss for the year, in a certain year would always be taken automatically to retained earnings in the following year. You understand? And your retained earnings is the balance sheet account, right? So that answers Oluchi's question. So now, how can we create a ledger? Let's just create a couple of ledger accounts here before we go on a break, right? So let's create some couple of ledger accounts. Now, to create a ledger account, right, you need to go to account, the account module. You go to your list, right, and you go to list of accounts. Now, when you go to your list of accounts, you see the system already have some pre-added ledger accounts already. So there are some ledger account that the system has had, has added by default, right? So you can see, and if you want to go to the next screen, you can see this is displaying the first 20 items. If I go to page 2, I will see, some other, you can see expense, you have general expense, insurance, interest paid, security, staff welfare, several. Then we have balance sheet accounts, fixed asset, equipment, furniture and fittings, motor vehicles, and all, right? We have our trade receivable. We have some pre-existing ledger accounts already. So now we'll be creating ours, right? But then we need to note something. Before you create a ledger account, or before you create any record in the system, always search by standard practice. It's good for you to always search, right, your existing information. For instance, if I want to create a ledger account for let's say staff welfare. So, I could be so eager, oh yeah, because I know how to create an account. I just want to go here, add an account, but one thing you would want to do is to limit duplicate records. So always, you might not know, your colleague might have created, or it might have been in existence before. You might be searching for staff, whereas it was just welfare. So you need to search, beyond reasonable doubt to say, oh, if I search for staff, what do we have? I have staff welfare, I have staff loans. So what I have here, okay, staff welfare is there. You understand? It simply means I don't need to create. But let's say what I want to create is staff salary. I'm just saying now, staff salary expense or so. And what I'm saying is that so I can go ahead because staff salary is not here. But then I'm sure if I search for salaries, right, I would see, you can see we have salaries and wages. But so it's just a tip to say before you should or before you can add any record, be it customer, ledger account, anything in your system, always search, right? Why? Simply because you want to avoid duplicate records as best as you can within the system, right? So that being said, so let's now add a chart of account, a ledger account rather. So we already have our chart of accounts, right? Which is this. These are the list of our, GL accounts that we have within the system. We have sales, we have, and you notice we have some accounts, they don't have actions, they don't have options in front, right? You can't edit them, you can't delete them. We call them system accounts, as you can see here, right? We call them system accounts. They are already created by default, like, and they have some mappings, right, that the developer has done already. So the only ones you can edit or you can modify or you can change their name are those ones you can see that are colored in blue, and you see that they have actions in front. You can choose to edit, and if you don't want them, you can delete them, right? If they are not peculiar to your business, you can delete them. You understand? So but note, the system would only allow you to delete any record, in the system if it has no activities to it, right? But if it has activities, the system will not allow you to delete. If you've posted into a ledger account, right, be it just one single posting, the system will not allow you to delete. The best you can do is to make such ledger accounts inactive, right? Okay, so now uh let's now create our ledger account. So we already shared with us some class exercise, which is one of those things that we'll be doing, right? And we see we have a list of ledger accounts that we want to create, right? So we have borrowed expenses, we have some expense, we have PPs, then we have some ledger account that are current liabilities, current assets, and banks. So to make it much more easier, just go to add account. So we have add account, we have item account, we have bank account. Now, what's the difference? Account is just your strictly ledgers, like your street ledger accounts, right? And which is your normal, your typical expenses and your assets. You understand? Or your liabilities. But then your item account, if you want to create any account, be it revenue or cost of sales account, that you want to attach to an item or to a service, to say anytime I raise customers invoice, this is where I want my revenue to go to. If you want such account to be available for selection, then you make use of item account, right? But then if what you want to create is not just a ledger, but then it's a bank, it's a petty cash, or your guarantee towards bank ledger, you want to make provision for any bank, any cash and cash equivalent at all, then you make use of bank account. You don't create a bank account as just just as an account. Please note. So, but if you are creating any ledger and it doesn't fall within this category of an item, and doesn't fall between the into the category of your bank, or cash, to create them as accounts. But if it falls into any of this category, make use of any of this. So what I'm creating is an expense, right? So simply means it's a typical account, right? But then one thing you will notice here is, unlike some other softwares, like some other big, much more bigger ERP systems, right? That they have ledger codes. I walked us through ledger codes here, right? Majority, some systems, allows ledger codes, right? But Sage Business Cloud Accounting, only starts from description and account category, right? But I only took us to that aspect of ledger code, so that when we find ourselves in such situation, it won't sound or seem strange to us, right? But then we'll be starting. So what we'll be working with is basically description and account category. So borrow expenses as an account category, as our ledger name. Then what category does it belong to? So the system already has some predefined categories already, and it has a slight a slight information or a slight meaning for some of us that are non-accountants. So if what you are creating is a revenue item, you select sales. If it's a cost of sales, it's a direct cost, right? You select cost of sales. If it's other income to you, which is income that are going from other activities, not your normal business operations. So you can select other income. But then what we are creating is expenses. So I'll just select expenses, right? And of course, I don't have any opening balance. So description here is saying you can give the ledger an additional description, so that for anybody that is accessing the system for other users, they can know the reason why this borrowed expenses is created. Do you understand? Like, you are creating a ledger, but no one knows why you are creating that ledger. No one knows what you want to post into it. But if you give additional description there, it helps whoever that is working with, even you yourself. Sometime in future, you can just look at this ledger and say, maybe because you are not incurring any expenses that is in particular to or that is peculiar to borrow expenses in future. You might not even know, and you are seeing a balance there. As some, yeah. But if you had specified a description to that, help you say, oh, you are using this to track borrow expenses, something like that. It's not compulsory, right? But it's just important you do. You understand? It helps you. It helps you. So ever, a good accountant should be able to keep complete information. So if you, it's just important, but then it's not compulsory, right? So I would do this, and I would do save. I can either do save, or I do save and new. But what I'm doing here is to create a ledger account, right? So I will do save and new. It simply means now, if you want to spend any money on borrowed expenses, right, from our banking model or from our petty cash, we would have that ledger account, available for selection, right? So that is what that means, right? So okay, so let me create We have security of stations expenses, right, as another line item here. I'll copy it, I'll paste this. Of course, it's equally an expenses, right? I can do save and new. What I'm doing here is to create, ledger accounts, right? So the next one, I have electricity expense. So I have like 5 expenses here. Okay, so because of time, would create just few, but let me go as fast as I can because we have majority of them on the opening balance screen as well. So I will just stop there at generator expense, then let's create plant and equipment at PPE at cost. So here, this is not an expense, rather, this will be tagged as non-current assets, right? So non-current assets simply because, okay, non-current assets, okay. Um, Sorry, we have leisure property. I'm only creating ledger accounts because if you don't have them created, then there's no way your reporting will be fine. Okay, so this is equally non-current assets. Save and new. Then I have short-term loan. It's a current liability. Okay, so current liability. Okay, that is fine. So it has opening balance and opening balance date, but don't be tempted to use this because we work also how to cater for opening balances as a whole exercise, right? So, but then what we are bothered about is the account name and the account category, of course. Then save and new, whichever the category, that we have, the system would always, so this is other current assets. Okay, so current assets, save and new. Then of course we have our bank and cash, right? So to create our bank and cash, remember we won't create them like this, right? So we will need to create them, by going to the list of accounts. Then of course, what we are adding is a bank or a credit card. You understand? You notice his screen is slightly different. This is new bank account here, right? So what we want to do is to create Antitrust Bank. We can say GTB correct account, for instance. So category, let's just specify a category called bank. We'll see how that works. Okay, so payment method is electronic fund transfer, bank name, GTB. If you have account number, for that bank, which you would have, you would specify the branch name, the description for this bank account. Opening balance, don't include anything there. Would cater for opening balance as an exercise, right? So you do save and new. Okay, bank account name cannot be empty. Okay, double spacing is here. Okay, so the system does not allow for double spacing. So which is what I have done in my case before. So I would eradicate that. Click on save and new. Now we'll see those banks that we've created now, but let's just let's make provision for all of this. So also EFT, Zenith Bank, our number is this, save and new. So I am just going fast because I will be going on break shortly. So uh, so that's so this is equally electronic for transfer. That's the default payment method. So although the system at the point of doing transaction, system would always allow us for that specify. So let's say that's the account number there, and I want to save a new. Then we have cash in hand. So cash on hand, yeah. So category, let's just create a category for cash specifically too. Okay. Then bank name, account number. There's no account number. It's cash in hand. So then we can then save. So what we have done, right, is because the thing is, before, accounting system is all about garbage in, garbage out. So before you start entering activities, you need to create your records. And where does your record start from? It starts from your chart of account, because your chart of account is the most important aspect, of your accounting system. That is where you get to specify your expense head, you get to specify your revenue head, which is your sales. That's where you get to specify your cost of sales, right, which is your direct cost in this case as well, right, and your other current asset and non-current asset and the likes, right. But it's just that all these that we are seeing here, are our individual accounts. You can see this was the borrowed expenses we created just now, and if we want to modify it, we can just click on it to edit. If what we want to modify is the description, you can always select, or if what we want to modify is the category. Let's say I have mistakenly have linked this to be sales, which is wrong, right? Which is wrong. So if I notice, and it simply means if I post anything in that ledger, it will be reporting as my revenue, which is wrong. So that is why the accounting system, the general ledger or chart of account is the most important aspect. So if I have this go like this, my report will be so wrong. So what's supposed to be an expenses, will be reporting as my revenue, right? So, but then let me edit and make it, the right category. So now, if there are any questions for me, you can raise your hands, or you can. Uh, okay, let me see that plant and machinery. Let me see what I selected. So, if there are questions for me, please, I really want us to really get that part. So I can easily search for plants here to see what I have, specified in there. Yes, so it's correct. So plant and machinery is correct. So is a non-current asset item. So yeah, it's been selected to the correct. Okay. Yes, so plant and machinery is not a current asset, item. So it's being used, for more than 12 accounting periods. So the plant and machinery belong to those class of asset that you use for more than 1 year, to be able to generate inflows. Okay, so if there are any questions, okay, yeah. So for Aisha Ismail, by setting the company details, you noticed I didn't include the postal code. Yeah, postal code, if you have it, you can specify it, But because those informations that we have, they are just test information. So if you have your postal code for your location, you can always specify it, right? So uh if there are any further questions before we just go on short break, like 15 minutes or so, just to relax. For some of us that want to pray, we can go do that, and then we would have the course to revert back. Okay, so uh, my name is Aziz Adeomi. So what contact them? Uh, okay, like I didn't really get that clarity. And if you would like to still speak, you can just raise your hand. You can raise your hand so that we can allow you to speak. Okay, so
Yeah, thank you everyone for the time spent so far. I think we will be going for a short break now, and let us try to note down, the questions that we do have. So if there is any question that you have, based on what we've done so far, we can always, ask these questions, and we'll be sure that we'd actually, give you answers to these questions. So I see somebody asking Please is plant and machinery. Please, plant and machinery is not a current item. Would always would answer majority of what is your questions after the break. So we'll be going on a 15-minute break. Let's stretch our legs. What We'll be back by 2:25. So by 2:23, the session will be hop back. We start taking questions and the likes. So by 2:25, we believe everyone should be seated, and we will continue the session by that. So we just have a 15-minute break so that we can stretch our legs. So please, 2:23, please be back on your seats. 2:25, we'll continue the session. Thank you, everyone.
Okay, so just sorry before we just go on that short break, so someone Elizabeth is asking that is it just copy and pasting that is the creation of chart of account? No, 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 not really. I was just making use of the class exercise document, which is being shared with us too. So it already has the list of ledger accounts I want to create. So I'm only copying, right? So however, I have the laws way of typing, right? If I come to my software, right, and I go to add an account, I can always type to say if let's say we want to track this let's say I want to create an expense line for let me see, let's say electricity. It allows me type. Do you understand? So I was only copying and pasting. Do you understand? From the class exercise, to the software. Okay, so yes, yes, you can always. So the idea, I can see that Aishat is equally asking another question here, saying, how do we create, hours just like the class assessment chart of account? Yes, you created a demo company for your Sage One as well. Once you log in, the beauty is after today's session, you can always go to, what we've done, right? Then you can always go to your accounts, just like I explained to us, list of accounts. I can always create your chart of account from there. Just the same way, go to list of accounts, and you click on add an account, then you'll be able to do that. So how do you apply number into the ledgers? Yes, that's by SAS. Yes, I explained that several softwares allow for that. Several softwares allow for that. Uh, but then Sage Business Cloud Accounting does not accommodate codes. That's just to answer that. So, well, you can still get those questions. You can still keep them coming. Then we'll just address them after the break, right? All right. Thank you. See you by 2:25. All right.
Yeah, hello everyone. Yeah, I think our break is over now, so we should all be joining back. We currently have only 17 online. Please, let's just take a few minutes, like a minute or two, so that others could, easily join us back. People are currently on break, but I believe they should be checking their time by now. Okay, now it's fine. People are increasing. Let's just say like a minute, then we continue. So in the meantime, we'll look at the questions and answer. The questions and answer session. We'll look at a few questions that has been asked, and we'll try to answer them while we wait for others to join us. So we look at. I think the last question we have here is: can this software be applied in government work, or is it mainly used for companies and businesses? Okay. Business cloud accounting can actually be used by various sectors, including the government. In the government sector, you can always use it. It will definitely work well for the ministries, departments, and agencies. So it's not basically for uh, the businesses only. So, but what really matter is actually how it is being configured. So, because some of these departments are not meant to, generate profit. So, there might be the way you actually structure a chart of accounts, will be in line with what the government have actually put in place. So, you have to, consider all those factors that are peculiar to the public sector, while configuring the system. So, and if that is done properly by a consultant, then it should actually work well for you. All right. Somebody is saying there are some questions raised earlier. How do we add numbering to the ledgers? I think my colleague actually said that for Sage Business Cloud Accounting, you will not be able to add numberings to your ledgers. Some other softwares will allow you, add numbering to your ledger. You'll be able to structure your ledger based on your coding. But if you are specific as to how you would be able to number, ledgers in Sage Business Cloud Accounting, like my colleague actually said, all you'll be able to do is the ledger account description. You will not be able to attach general ledger account code, to ledgers in Sage Business Cloud Accounting. And but for the purpose of general knowledge, which is maybe if you are using Zoho Book, for instance, you'll be able to do that. uh, the system, actually allow, and it has actually demonstrates how you can actually attach numbering to those ledger code. All right, let me check if we have any other question before we hand over to the facilitator so that I can continue. All right, so I'm trying to check here. Okay, he said, is it the individual ledger that cumulative up to form the balance sheet? Okay, I think somebody who is trying to ask that, is it or SAS? Is it the individual ledger, that add up to form the balance sheet? Is just like you said, the element of a financial statement. So on your, it depends on the each specific ledger. It depends on when you are creating it, the kind of category you actually attribute to that particular account, that would actually will determine how the system will process the information in that ledger. So if you have a balance sheet ledger, if you created a ledger as a balance sheet item, it means year in, year out, the balance would always roll over. But an income statement item will close up at the end of your financial year, then roll into your retained earnings, which will be a balance sheet item. So every other ledgers are not rolling, into a single ledger in the balance sheet. The only way it's happening is in the income statement item, because you need to get, the profit retained and profit distributed for the year. which would go from income statement to the balance sheet. Because at the beginning of every financial period, all ledgers in your income statement items should be zero. So when you check your sales for the beginning of a new year, you shouldn't be seeing the sales for last year there. So that is why everything will go to a zero and you would actually start. So can you, Abiola, can you please repeat your question? I can't quite get. We have quite a lot of questions here. You said your question is asked around 148. Please, you can drop it again if you would like us to, attend to it. Please, if you have it, kindly just copy it and paste it here so we can quickly look at the question again before we, commence the class. So somebody say for logistics retail business, kindly advise the software to adopt between Sage and or Cloud ERP. Yeah, basically, when deciding on software to be used for entities, we consider quite a lot of factors. Like you said, logistics is just one of the operational activity of the firm. So we consider quite some other factors. We consider their reporting needs. We consider their procurement needs, the way they actually intend to invoice, their customers. So it's not just a straightforward answer to tell you that this will be the best software for this industry, because we as professionals, before we advise on the choice of software, we do actually do business need analysis. We do analyze business requirements. We get to know your reporting needs. We get to know what kind of infrastructure you already have in place. What are your processes? What are your requirements from the system? So those are the things that are actually shaping, the way we actually advise. So we've actually have only one information, which is logistics. Knowing that the business is a logistic retail business is not enough for us to say that this will be the best software that they have. You can't actually use a class software if your logistic business is going into areas where you don't even have internet in the first place. So reasons like that and so many other things is what we consider. So uh, all right. Somebody is saying that can you please explain in clear terms what the lockdown date is, what the lockdown date is with example. All right. Okay. Okay. The facilitator would do more explanation as to that. All right. I think we have significant number of people online now. Let me just hand over, the baton to the facilitator, so we can continue. We try to answer a few questions for the next 5 minutes. Then we can go back into the session so that we can complete today's activities. So at the end of today's activity, we would also take our time to answer questions, and at the end of the day, we would actually create a group chat where we would had all participants, so that by the time you start practicing your questions, start using the system. If you have questions, one or two, you can always drop it there, and be sure that we would definitely, answer your questions. All right. So thank you. So my colleague Aziz is ready to.
All right. Thank you, Olabi. So let me just take it quickly from Wisdom's question, where he asked about, re-explaining what the lockdown date means. So now I stated that, of course, the lockdown date can be accessed from the company settings, right? You have general settings and under the financial year. So I explained that, by practice, by standard practice, most companies would always close their books. They close their books it could be on a yearly basis, on a monthly basis, or on a weekly basis. In fact, daily basis as in some cases. So it simply means when you are done posting for a particular month, for instance, let's say we are in September, we are in September now. If I have submitted my report, for August, right? It simply means I need to close my August period. So within say business cloud accounting, how do you do that? How do you close that period? Because remember, you are closing that period because you don't want others to post into August so that it won't adjust your figures. right? And anybody that wants to post, needs to go through the super user, needs to seek for permission. So the only way you can close that period, that August period, to avoid people mistakenly posting into it, is to go to your lockdown date and set a lockdown date. You are setting a lockdown date. You say, I want to close, my books of accounts up until, you know, this period is specified. If you say 30th, you know, okay, I think August should be, I can specify here to say 31st of August 2022. If I do 31st of August and I do save, simply means the system would not allow, transactions into the system, any transaction that is before 1st of September. So if the transaction were to be posted as at August, it won't allow it. If it were to be posted as at January 2022, it won't allow it. So you use lockdown date to always close your periods, your books. You understand? So now you are sure, you are certain that nobody can post back to August. You understand? Unless you go back, and go and change or remove the lockdown date. So by practice, it is always important, that you close your period periodically. Your period, some I've seen some a retail company, they do close their books on a daily. Once they have finalized their account in the night and they have done their posting, so the head of finance will simply go and set the lockdown date. You understand? To say we are finalized for today. So if there's any posting that needs to be done or that was skipped, then he has to be aware. Do you understand? So lockdown date helps you to close, and open your period, on a periodical basis, be it monthly, be it okay, my network. Okay, please confirm if you can hear me and if you can see my screen. Okay, so please, I just saw a comment that my network is not too good. Uh, okay, okay, thank you, Frederick. But that's just it about lockdown period. So, okay, thank you, Oluchi. Okay, so now let me now proceed to the order of the day. Now we've walked ourselves through setting up the system, right? We've seen we've been able to set some default to be able to we've been able to add like company logos, been able to create our company information as to the name of the company, the financial year and the likes, right? So now let's now move to the next phase. The next phase is creating master records, right? So we need to be able to create our records in the system. And we've started well by going through the chart of accounts. Do we understand? We started well by going through the chart of accounts. Now, one more thing I would also like to create from the chart of accounts screen is, we've created accounts, then we've created bank accounts. So let's create an item account and we'll see the use of what the item account is to be used for. Remember, item account is to be created for sales and purchases. What do I mean? When we are creating an item, different companies would define how they want their reporting to be. For the purpose of this training, we want our reporting to be such that now we have items, inventory items, right? These inventory items are in category. We have those ones that falls under storage services and those ones that falls under the seafood category. Now we want the system to say that anytime we are selling any item that belongs to seafood, it should report into the seafood revenue ledger, right? But you will see how that works. So we can only achieve that by creating an item account. It's a chart of account, it's a ledger account, but then because it's to be linked to an item. So that anytime we are buying or we are selling that item, the system will do the ledger entries for us, right? So I'm creating revenue seafood, right, as sales. So I will do new, right? Then I will equally create, a cost of sales, for seafood as purchases, right? So by the time we are generating our report, you see how that works. So the second one is storage service. So any item that we link to storage services, right? So anytime we are I recognize it, anytime we are raising customers invoice, you know, the GL entry should always go to the revenue storage service, right? And it's just similar to what I was trying to explain to us about chart of accounts the other time. So now, if you are looking at my own chart of accounts, and you are seeing, so let me just show you this. Now you are looking at my chart of accounts. The very first thing, you are looking at my revenue. You are seeing seafood. You are seeing storage services. You are seeing my cost, seafood storage services. What does it tell you? So it tells you basically that this is what the company is basically into, right? So probably they sell seafood, items, crabs, shrimps, and the likes, or we render storage services. Do you understand? So meaning our revenue could come from both ways. So it would be so wrong for someone to say maybe this company is an airline company. You understand? Because you've seen it from the chart of account. And that is why chart of account is so important in all systems. That is why chart of account helps to segregate. You can ascertain which company, which industry, which sector, what is their reporting, what is the reporting of these companies. Like simply, so this company is interested in seeing their revenue based on items that belongs to seafood, and those ones are storage services, and they can still have on and on, more, right? But that's just to complete the cycle of that chart of account, right? So now we'll move to the next phase. And what is the next phase, right? We want to create inventory items, right? So we've created our ledgers, but we need to create the services or the products that we deal with. You understand? Because if there are no products, then what are you doing? All businesses, you understand, all business or profit oriented company would always provide either revenue or service, right? They would always provide either revenue or service, right? So now, that is the next thing is now to create our inventory items in the system, and we'll get insight as to what are inventory items, what are those categories of inventory items that we have. Do you get? We'll see them here, and for some of us that are maybe inventory officers or warehouse personnel, we get more insight on these analysis. So to treat inventory related items, to create inventory related items, or do inventory specific transactions, you go to the items module, right? And from the items module, we have what we call, you go to list. But before we go to list of items, let's create item categories, right? So the question is, what are item categories? See, this is what differentiates who is a good accountant using the system, right? You've created your ledgers, but you need to categorize all your records, right? So if you are creating inventory items, you need to specify unique categories for them, so that when you are generating category, just like group, you are grouping them. So when you are generating your report, you can say, oh, I want my report to be fetched, based on this category, based on this group. Do you understand? So category in this system is not compulsory, but it's very, very important. So let's create categories, and you will see the need of those categories as we proceed. So category is just saying, you can see we have to create inventory items from our exercise, right? And these are the categories, that we have. The two unique categories we have is storage services and of course seafood. And you will see, how or what they are meant to do. But inventory category is always good, right? It's always good you create inventory category, so that by the time you are generating your report, right, you would always have a better insight. If you be so different from someone that did not create categories, for their records. For instance, you know that the management wants to know the value, the amount or the quantity of seafood items that they've sold. One of the best ways you can do that is to create seafood as a category, right? So it depends, and it goes. Let's say we are in a company, they sell gadgets, right? And you want to be able to categorize your gadgets. If you sell phone, laptops, and and all those accessories, right? So you want, for instance, you want to create a category called maybe HP, for laptops. You want to create HP, you want to create Lenovo. So it simply means all HP systems that you are creating as inventory items will be linked to that HP category. So that no matter whether what you are selling is HP Pavilion or HP ProBook or any of those, you can easily trace it, to say what is the total sales that I've seen from HP. That what are those quantity of items that if you have created a category, it will be very easy for you to narrow down your report, right? But then let's now proceed to creating items. So you will see where the category is much more applicable. So what are items? Items, are those activities, you know, that we sell, or we buy, as the case may be. So it could be physical, it could be service, right? It could be physical, it could be service. And what's the difference, right? So we'll see now. So the very first thing we want to treat here is we want to create this inventory item. And as you can see, all this inventory item, we have a service item and we have physical item. Now, what is a service item and what is a physical item? you know so I would specify here my code, my inventory code. So inventory item that still, you can use them interchangeably, right? So what's the description of this item I'm creating? The description of this item is can be found under item name, right? And we can see it's called storage services, right? So storage services, which category? Because we've been able to create a category, that is why, the system is showing this is the seafood category I created, a few minutes ago, and the storage services, of course. But judging by the by what we have here, the category is storage services, right? Okay, one moment, sorry. Oh, okay. Okay. Uh, so sorry. I think I had a network challenge there. But please confirm if you can hear me now. So sorry. Confirm if you can hear me. Okay.
Yeah, I guess your network is fine now. I can hear you now. Yeah, I think yes, yes. Aisha, yeah. I think we are good to
Okay.
go.
Yeah. Okay. All right. Okay. So sorry about that. All right. So we were trying to create, inventory item, right? And what we are trying to create is storage services. And I stated that the category, in this case, please confirm if you can see my screen so that uh, please confirm if you can see my screen so that I'll be sure we're in good hands. Okay. All right. Thank you, Aishat. Thank you, Abubakar. Okay. All right. So we're trying to create inventory items. And what is the category? The category, is it falls under storage side. So it simply means anytime we are creating anything related to storage services. Imagine, let's say we are creating ice blocks or any other inventory item, that is so we can always link them to the category called storage services. But this particular one that we are creating is a service item. So it simply means we want to be able to bill people, for storage services. So the item type, is it physical? No, it's service, right? Why? Why? What's the difference? Now, physical items are those items you can actually see. They're accountable. You understand? Imagine you are selling a laptop, you know, and it has, of course, you'd want to recognize to say you bought 5 quantities, you sold 2. You understand? So they will still be tagged as physical items because you can see them and you can count them. But if those service that you render, if what you are creating as service, right? You imagine you just you have a saloon, and you want to invoice a customer, you want to bill a customer, or you are a consulting firm, you've consulted for a client, so that service you are rendering is not physical in nature. It will be service. So if what you are dealing with, if the item you are creating is physical, you select physical, and if what you are dealing with is service, you select service. Now the system would track quantities when it comes to that physical. If you are using physical, simply means the system will monitor, when you are buying and when you are selling. But if it's service, the system would not, monitor quantities at all, right? And as the case may be, always use physical for those items that you can see and you can count. You understand? But of course, service would be for those items you can't see nor count. So in this case, we'll be selecting service. So it is always important to select the right item type. It is always important, right? So we'll be selecting service, and okay, so the next thing here is the items detail. If we have, a standard, selling price that we want to attribute to that item, we can specify it here, right? So that by the time you are checking out, you are selling, the system would always, consider that selling price, right? Then the next thing is the unit of measure. The unit of measure, in this case is what units, did you sell? Is it pieces? Is it units? Is it kg? Such item. You have some items that you are, imagine you are filling gas. You want to, your unit of measure would want to be kg, but you are selling phone, your unit of measure will be pieces. Let's say you are selling drinks. You can have unit of measure to say packs. You understand? You can have dozens, those are a respective unit of measure. But yes, storage, what we are making use of is units. And the sales account and purchases account. Remember what you are able to select here are those item accounts that we've created. If I did not change this, it simply means by default, my revenue for this item would go to sales, right? And my cost, when it comes to this item, would always go to purchases. But because I've created an item account, so I want to link, this to say anytime I invoice customers on this, always go to revenue, storage services, right? And anytime I incur any cost, always go to our cost of sales, storage services, right? And that's just the whole thing. Then if you want to ascertain, a price list, remember we created price list, in the company settings section, we created price list. So if you want to specify any price list, we can specify it here. And we have 2 price lists created yet already, wholesale, retail. In your own case, it might be different, it might be corporate, it might be individual. You understand? But that's just to show us that the system has that facility. So having explained this to us, all these other tabs, will be populated, if you have transactions. Once you have transactions, then all these other tabs will be active, right? So, but the basic thing we need to note when creating inventory item is we are putting the item code, the item description, the category it belongs to, which is, this. You can, if you want to create a new category, you can always, create on the fly by clicking this button, add new category, right? But then the item type, is it physical, is it service, right? We already know the difference between the two now, right? So what we are creating, the first one is service, and of course, I will do save and new, right? I've created that inventory item. It's as simple as that, inventory items are those service or those items that we trade with. You understand? So now, because those are those items that we use in recognizing revenue. Do you understand? So that is why they are important, right? So what are those activities that you deal with that gives you, that are using as certain revenue in your firm? Those are what you create as inventory. So the next one, let me quickly create points, because of time. Sorry, I'm doing a bit of copy and paste, we've also shared this material with us as well. So the category for this, what category does it belong to? Seafood, right? Okay. So I'll just select seafood here. Then item type will be physical, right? Opening cost, opening quantity, don't worry, we'll deal with that shortly, right? So then the item, so this would also, because the category is seafood, right? The revenue is going to seafood and the purchases is equally going to seafood, right? So I haven't done this. I want to do create and new, because it's very, very simple, right? So let me create the next one, Cocas. I will create description. Okay. So category belongs to seafood to physical because we can see it and we can count it. So this is equally going to seafood. So I want to do save and new. Then I want to create crabs, right? We're trying to do this so that we can move fast, of course, because of time. So this will go to seafood. We have 3 more to go. Fishes, the seafood. So lobsters. Okay. So the category, it also belongs to seafood. Then the revenue. So that's that because majority of what we deal with, you know, uh so ice block with difference. Yes, our company sells ice block too in this case. So this will be ice blocks, you know, storage services. But then ice block, we want to be able to count it. We can count, we can see, so it's physical, right? But then because it belongs to storage services, so the revenue and cost would always go to storage services. So I haven't done this. I will click on save. Right, we've been able to create inventory items, right? But then remember, system is about garbage in, garbage out. It is what you create, that. And the way it works is this: when you want to create a new, inventory item, always ascertain, because your records, the codes must be uniform, right? Always ascertain the last inventory code. So the last one is 7, right? It simply means if I'm to create the next one, it will be item 008. And it is not compulsory that your prefix will be item. It differs in so many companies. So many companies, their prefix could be different. Their prefix could be based on the category. You understand? Some their prefix could be, if you sell laptops and phones, your prefix for your laptops could be LAP01, LAP02, or you could have it as LAP-HP01, LAP LAN for Lenovo one, like that. So it's not to say this is how you should always go about the code. No. So it's dynamic, with respect to different companies, right? So okay. So the next thing after we must have created the items, it's a chain. Do you get? We've set up the company, and that is how it works in an account. We've created the company, you've created the ledger account, right? You've created the items, which signifies the activities you deal with. Then the next thing to do, is to create your suppliers, because these items, we need to be able to buy these items into the system before we will be able to sell, to generate revenue. Do you understand? And how would we be able to do that? We would be able to do that by having our suppliers in the system. So it simply means we'll move to creating our suppliers, right? Then after which we've created our suppliers, then we proceed to creating customers because that is the flow. Do you understand? We've been able to highlight the service that we deal with, which is the items. So then what are those that are supplying us? So we need to be able to have it in the system. Who are our vendors? So that is when once we have our vendors created, then we can now have something like suppliers invoice or purchase orders, which we'll be going into shortly as well. Do you understand? Now, then of course we'll create our customers also shortly, right? So that is how we do items. So let's now proceed to creating our suppliers and let's see the dynamics, what are involved in creating suppliers, because that is also another critical part, right? Which, as someone who is using a system, you should be able to differentiate, you should be able to say, that yes, this is what I've learned, with this system. So now let's proceed to suppliers. We've been able to create inventory items, right? And inventory items, we've said that inventory items are those things that we deal with, right? So now, suppliers. Let's go to list of suppliers. For individual module, it has the shortcut of add. If you go to item, you see add. If you go to customer, you see add. If you go to account, you see add an account. But I'm not making use of that. Why? Standard, it is always best to go through your list, simply because it is very much possible that you have that item, that record you want to create now. It's very much possible you have it in existence before. If you do, always search before you create. Don't assume you don't have it. Always search. Like if I want to come and create suppliers, it's because I know that my suppliers are empty now. So the best thing to do is to always search. A junior officer or a senior officer might have created it, or they might have created it in another name. Now, let's say supplier name is Aziz Adeomi, and imagine someone else has created it as Adeomi Aziz. You might not know, you might be looking for Aziz Adeomi, but when you just search by Aziz, right, you'll be able to see all the Aziz that have been created, and you can ascertain to say, oh, this Adeomi Aziz could be that Aziz Adeomi that I intend to create, so as to avoid duplicate records. A very good accountant or a very good system person would try to limit as best as they can, duplicate records, right? So that is very, you need to keep that at the back of your mind. So let's create supply. That's why you can see that I'm navigating to list, so that even if I want to create, I can look through my existing list to be sure I don't have duplicate records in the system, right? So now, supplier's name. So now we'll make reference to our training materials, again. And if I scroll, you see we have we have bank account, we've done that, we have customers, then we have list of suppliers that we are to create in the system. Let me zoom it. So we can see we have four suppliers to be created, right? And we have their address, we have their email, we have their phone number, right? So just to make it very, very quick, right? So what do we need to fill? The important information we need to fill here is the name, the category. But then I have the option of creating the category from here, and I have the option of creating it on the fly here. So now, what are those categories that are peculiar to our suppliers? We have several of them, right? But the fundamental or the primary one you can get, is we can have a trade, creditor, and we can also have a sundry creditor. They are different, right? There is difference between a trade creditor, and a sundry creditor. In some cases they could call it uh, trade payables and sundry payables. You have them like that. Now the category here, I want to create two categories, right? I want to create one to be trade creditor, and what is who are those suppliers you can tag as trade creditors? So those are the suppliers that supply us, our our how do I put it? Like, let's say we are dealing with seafood now, right? So those suppliers that supplies us all this crab, this ice block that we've created, you understand? Those ones will be tagged as our trade creditors, because they they deal with, they render services or provide to us products, that we sell normally to be able to recognize revenue. So like our day-to-day activities, do you understand? Those activities that we do in generating revenue, they service us such. So we tag them as trade creditors. So let me create another set of categories and call them sundry. However, our sundry creditors will be those vendors, right? Those suppliers that, they also render services to us, but that service is not related to those day-to-day activities that we use in generating revenue. What do I mean? You know, a vendor that supplies us scrap that we intend to sell, you know, is our trade, creditor. However, a vendor that maybe what they do is to render cleaning services to us. You understand? What they do is to render maybe some of our repairs. So those ones will be tagged as sundry creditors. They are not trade creditors. We don't really trade with them. They only service us to be able to help out with one or two things. So they are not servicing us, in relation to those items or those services that we will use to generate revenue. I hope we are following. So that's just a typical situation, a typical scenario. However, you can still have other categories, depending on how you want it to be. Do you understand? Some categories for some company could be local suppliers, foreign suppliers. So they want to know their receivables based on those suppliers that are local. Some they will categorize their suppliers based on their locations. They want to know those suppliers that are in Lagos. They want to know those ones that are in Abuja. Like that. But the easiest one or the common one you can find is that of trade creditors and sundry creditors, and we know when to apply them now, right? So I will select trade creditor, right? What are those other information? Then I need to specify the address. So the address is equally not, the system would not compulsory, that information for you. It's not compulsory, but then it's important, right? So it's important. So Nigeria, sorry, uh, Nigeria. Okay, so I can just copy from postal address. This is supposed to be postal address anyways. So, but then I'm only making it of my postal and my physical address to be the same. So what I did was to click on copy from postal address, right? So the next information is contact name. Who is our contact person there? From this vendor's end. If we have a contact person, we can specify, right? Then another thing we have is email and phone number. So this is just a generic email, right? And specify phone number here too. Okay. So if you have a contact person, let's say our contact person there is Aziz, right? It's just good, a good accountant or a good software person should be able to keep all those information. So should you need it, you can always log into your system to check, right? So now the other information you have here that can be very, very important to you. If the supplier is used to offering you special discounts, you can always specify it here. But then due date for payment. If you have a due date majorly for payments. So when this supplier supplies us, our agreement is that we'll settle those invoices. If it is 30 days, you specify. If it is at the end of the month, you specify. So if it is 30 days time, you just select this, you just select 30 days from the date of invoice, so that the system would always flag that invoice as due, that is due for payment. So that's all you need to do. Then we have the banking details. If you want to keep banking details, for that supplier, so that when you want to make payments, you just know that their account details is on your system. And that is what an accounting system is meant to do, to keep some of these informations, for you, as the case may be. So if you have that information, you can input. If you don't, you can still save. It doesn't really matter. So I will do what? I will click on save and new, because I want to be able to create a new record, right? If you have the VAT number for that vendor, you can also specify it here as VAT reference, right? Then I haven't done that. I'll just do save and new. Then I will try to create other vendors, within the system. Okay, please, I hope we are together. So these are just critical aspects, that I'm walking us through, how to create all these informations so that we'll be sure that whatsoever, because if your informations are not well created, be sure, be certain that your reporting will not be fine, right? So we're only taking those through the nitty gritty, So I want to tag this supplier as trade creditor too. Okay. So postal address, we have it here. So it's not a must that your address must be in one line. So you can always, make it. That's why we have several lines. So in piecemeal. Okay. So I want to copy from postal address. I want to copy from postal address to physical address. And I want to specify the mail and the phone number. Okay. Okay. And the phone number. All right. So these also a due dates 30 days from the date of invoice. So I just want to specify that. Then do save and new. So if you have any information as per the web address, you can always specify that too. So address is the address. Let me take this to be, sundry, right? Let me take that to be sundry. And this is the address. Okay. Like Lagos, Nigeria. This, their email. Yeah. And phone number, of course. So the essence of doing all this is if let's say there is a need to follow up with a particular vendor in the next future, they need to bother yourself about majority of those because if you've had the information in your system already, then just log into your system anywhere you are, then you'll be able to copy the number from there. So that is why it is very good, if you update all these information. So let me also specify this to be sundry on purpose. So about Avenue Lagos. So Nigeria, then I want to copy this. What's the email address? The sense of adding the email address also is that when we once you raise a purchase order, you can easily send a purchase order to your vendor from your system. We'll get there shortly, right? Okay, so we'll look at purchase order, we'll look at of course the procurement cycle. Once we are done with this part, so we are done with creating suppliers. Let's just create the last stuff here, which is customer. So I hope we all are together. If you have any question for me, you can always drop them in the chat column, right? So now to create our customers, who are our customers? Our customers, are those we sell to. They could be working customer, they could be our regular customers, right? Now, should we want to do that, we need to go to the customers column, right? We want to ensure that we have all our items in the system. Items, suppliers, customers, and you can always add more as they come. You understand? But once we are done with all this, it simply means we can go ahead to do our opening balance. We can go ahead, to do, our suppliers related transaction, do supplier purchase order, do supplier payments, look at, how to do suppliers invoices, when, are we to do supplier purchase order? When we do supplier purchase order, what is the effect? You understand? When we do supplier invoice, what is the effect? Do you get? So those are what we'll be moving into shortly. But then before we will be able to, do all of those transactions, we need to ensure we've created all our master files. All our master files, I've mentioned them earlier. So the only thing we have left is to create our customers. And for us to create our customers, just like I stated, you go to the customers module. So the software is actually one that is very easy to use, right? So you go to the customers module, you go to list. Remember, the list of every module, allows you to maintain, to create, edit, or delete a record. That's what you get to do on that list. Whereas transactions, you get to do all transactions that that module has to offer. Then of course the report there will be the report for that module. So let's quickly create our customers, right? So that we won't have challenges when it comes to doing customers related transaction, right? So to create our customers, we would also fall back, right, to our uh, our class exercise. And we only have just 5 customers to create, and I'll make it as fast or as brief as I can. So now, what are the things we need to, it's similar to that supplier screen. It's just an opposite, right? So the same informations you get to do, you get to keep based on your suppliers, and the same, similar informations you get to keep for your customers. It's just that their functions differ. You understand? One is supplying you, and you are selling to one. So now for your customers, right? So you want to copy your customer's name, right? Bakers Nigeria Limited, which is fine. Your category also want to create a category. Just like I said, your category could be several in this case. You could have a category for working. You could have a category called corporate. You could have a category called individuals, right? And you could equally have a category, for trade debtors, right, and sundry debtors, just like, what I explained in with respect to the suppliers the other time. So same thing is applicable. Sorry, trade debtors as a category. Want supposedly create another category too and call it sundry debtors, right? So I'll see. Okay, so Bakers Nigeria Limited, is a trade debtor to us. Is not a cash sale customer. It means they can buy now and pay later, right? So what's the customer's address? Opening balance and the likes will be treated, later on. But then this is their address. So that this their address is what would equally show, on their invoice, right? So Ikeja, GRA, Lagos, Nigeria as the address. This is their email, right? So paste this email here. I would, copy this phone number. These are generic informations anyway. So here I can copy, the postal address from here. Then we have what we call credit limits here. Now, what are credit limits? So if you have credit limits, for some organizations, they have credit control policies in place. They can set to say, oh, for this category of customers, we would only be allowed to sell up until this amount, as credit to them. So we are saying we have a policy to say, oh, any amount that is 5 million naira, or higher, do not sell on credit. Always ensure they pay. Do you get? So that's like a credit limit. So in that case, we just come here to set a credit limit, for 5 million. It simply means we are not allowed to sell to this customer on credit above 5 million. It is applicable in some firm. Do you understand? So, and you set credit limit per customer. Do you understand? So, you set credit limit per customer, although it's not compulsory, but some firm, uses that, right? And they don't joke with it. So they can say Aziz, okay, Aziz is a small customer. We can only sell to Aziz on let's say 200 naira, 200,000 naira on credit. So it simply means any thing that is above 200,000, then it's cash and carry. Your money, they will give you the goods. Do you understand? But if you set it to be zero, right, it simply means the system would allow, to any length. So you are not restricting the credit limit, on this customer. So I will do that, and I'm just set it to be zero. If I want to keep the customer VAT number, I can do that, right? Then the next thing here, I've selected my email, my phone number. So the next thing here is statement distribution, right? And even before statement distribution, you can see a checkbox saying invoices can be viewed online. This is applicable to the customer zone I explained to us in the company settings, right? So it simply means when we raise invoices, right, this customer can see it, from their portal. They can log into the portal and they can see it. Do you understand? So, but then that is if we have it checked. So if you uncheck, it simply means you don't want this customer to be able to see, their informations, on their portal, right? So that being said, the next thing here is statement distribution. Remember, in case this part is very important so that you don't have errors when you are trying to create your record, when you are trying to save it. Statement distribution simply means when I generate customer statements, how do I want to be able to send it to this customer? Do I want to just print, or do I just want to always email it, or I want to set it to print an email, or I just want to set it to none? Now, whichever that you are selecting, if you select print, it simply means if you don't have any email address specified here, the system will still allow you save this record, right? But if I select print an email, simply means you must have provided the customer's email here. But if I select print an email, for instance, look at, and I just copy, the email, this is set to print an email, then I do save, I would have an error to say, I have selected that the customer would receive statement via email and I didn't specify email address, you know. So in case you come across such, what do you need to do? Is it that you specify the customer's email address here, right? Or you change this statement distribution, you change it to print. It is all, please always note that. So if you specify anything email here, then you need to specify an email. If not, always set this statement distribution to print, right? And the due date for payment by default, you also want it to be 30 days, So it simply means we are giving our customers that privilege to say when we deliver, please always pay, before 30 days. If you didn't honor the payment before 30 days, then the invoice will be flagged as due, for payment. So we want to do save and new, right? And want to easily create a new, the remaining customer information. So now noble dwelling, just a quick copy and paste there to category. So let me tag this to be sundry, right? So plot 6 Phillips, so just do this. Let me say Lagos, copy this email, yeah, their phone number. Okay, so that's all. Okay, this should be print and email. So we want this to be 30 days from the date of invoice. In some cases, in some companies it's 15 days. In some companies it's cash and carry. So the due date is always the invoice date too. So if that is applicable, but just note that we have what we call a due date. When it comes to customers and suppliers balances, and we equally have what we call credit limits. And credit limits, is the applicable credit limit is to be applied by customers, so by individual customers, right? So okay, shouldn't be true with this. Okay, let's set this to print an email. Please still confirm if you can. So let's even say this on the 15 days, just for dynamics purpose. Okay, then I have progress limited. So to save our time, I don't need to add postal, or just to save our time. Let me just set this to print, right? And save a new because of time. So let me say Conco Limited. The category, of course, let's say it's trade debtors. Then no credit limits, no. Okay, I just want to set this to print, Then maybe set this to 15 days as well, right? So once I do that, I can now save. It simply means I have created, I've analyzed my customers' information, right? So, but then you need to note something, and I stated it also earlier. A good accounting system, right, would not allow you delete any information that has any activities. Let's take for instance, we have Conco Limited, and we know that maybe Conco Limited they are no longer in operation. We don't just want to have unnecessary list in our system, and someone advised that we should just delete the customer. The system would allow you delete, provided that you don't have any activities. When I say activities, any purchase order, any customer invoice or customer quotation or payment posted to this customer. But the moment you have one activity posted, you won't be able to delete. Now, in such situation, what can be done, right? So the only thing you can do in such situation is to edit, that customer information and make it inactive. Look at, there's an active checkbox here. So it simply means this customer is active. We can do transactions, with Concord. But we can always make it inactive because the system will not allow us delete once we have one or two activities in it. So same thing is applicable for your suppliers information. Same thing is applicable, for your ledger chart of accounts. Once you have any activities posted into them, note you won't be able to delete. The system would never allow you to delete, but you can always edit them and make them inactive. So if I make this concurrent inactive and I save, right, it simply means that the system, the record will still be there. But anytime I'm trying to do a transaction, I won't, there won't be, the system won't display such customer for me, right? And also, you can also do that if, let's say, you are still at the middle of reconciling this customer's account due to one reason or the other, and you want to restrict users from posting for some period of time, you can also go to that record and make that record inactive, you know, just to indicate, that you don't want them to post for now, right? So it's you can always do that, right? And if I come here, I've made it active again, I can come here to now do save. So if I make it active again, simply means users can now proceed, to into posting into that customer's account. So I hope it's clear. So same thing is applicable for the item, right? And every other thing. Okay. So yeah, for if customer have access to the information updated by you in Sage Cloud. Okay, yes. So the thing is, the information you'll be your customers will be having access to from their customer portal will just be those invoices you've raised and their accounts history. Do you understand? So this one, all the information you are entering here with respect to your customer is for your own record purpose. You want to, for instance, you want to know your customer's location, you know. And if it's working customer, then of course you can just create a customer called working customer. Do you understand? So that you don't just have a long list of customers. But if you have some specific customers that they buy from you often or you service them often, you can always create them into the system. Do you understand? So, but all these informations you have here, it's for your own sake, for your own company's sake. You understand? So, and this email is equally important because if you raise a customer invoice, you can simply send such invoice to the customer even without printing it out. You can choose to print and you can choose to send it to their email straight up from the software. The system will do that for you. And when you raise customer receipt as well, quotation invoices, receipts, credit notes, you can always send to their email address, right? So now we are done with that phase of adding customers. So we've done two major things now. We've been able to maintain our company's information and we've been able to create master file records, right? We've been able to create master files records. So what do we have now? It simply means we can proceed to now start doing transactions, right? And we can see what are those transactions, that do happen in business world. How are they being treated? What is it? What are those things we need to note? You understand? We'll be working us through that now, right? But We've done the part of creating records. If there's need for you to create new customers, just go to list of customers. Always ensure you search first to be sure that you don't have that record before, So if you search and you can't find them, then you can proceed to add a customer. Then the same way we've been adding, you can always, add yours. Okay, so now we're done with that. So the next phase now is to do what we call opening balance activities. Now, because we are just creating Sage, or we are just because we are just using Sage now, that does not mean that is the first time we are transacting, and it happens in some cases too. Take for instance, you must have been doing your transactions manually. Maybe you are writing manual invoices and all, but the moment you start using a software, you understand, and you are done with your master file, what do you want to do? You want to do what we call opening balances, right? You want to do what we call opening balances. What are opening balances, right? Is this the first time we are hearing it? If this is the first time, then be rest assured that we'll be breaking it down for us. So opening balances in this case is to say that yes, before using this accounting software, we already have some things in existence. We already have a bank account which has a balance. Let's say in one of our bank accounts, we have 2 million naira there. So now that we've created bank, in Sage, that doesn't mean that is the first time we'll be doing transaction in that bank. You understand? We have cash now. You can see everything is zero. We need to recognize all those balances in our software so that whatsoever reports we are generating will be fine. So we have balances also with respect to our customers. Maybe as at today that we are just using the software, we have some customers that are owing us. Likewise, we have some suppliers that we are owing. So you need to be able to treat it under the term called opening balances. So opening balances is to be done, when you are migrating into a new software, right? And opening balance as a term can also be used when you are starting a new financial year. But this one we are doing is just one off. Do you understand? It's because this is the first time we are using a software, and we are under the impression that we've been transacting. As at yesterday we sold, as at 2 days ago we bought. You understand? You need to recognize that balance into the system so that your report will be fine. So you can't just leave your system blank and say this is the first time you are posting expenses. Do you understand? No. Some expenses, you've been incurring some expenses from January up until today, and they need to come in form of a balance. For you to do this, if you don't really understand them well, you can liaise with an accountant, to be able to help you aggregate some of this, right? Opening balance, closing balance, they almost mean the same thing. And I repeat, opening balance and closing balance almost mean the same thing. And it depends on the context at which we are looking at it from. So in some cases, what you might be hearing is opening balances, and in some cases, what you might be hearing is closing balances. The only difference is this, right? Your closing balance as at a certain period. Let's say that uh what we want to do based on our activity now is that we want to bring in, opening balances as at 1st of January 2022. As you can see, these are the opening balances and transactions. So we have opening balances. So opening balance we have for our customers, we have for our vendors, we have for our inventory items, and we have for individual ledger accounts, which is this, right? You can see opening balance, which is at our balance now for 1st of January 2022. What does this mean? It means that this opening balance that is reading 1st of January 2022, happens to be our closing balance for 31st December 2021. So your closing balance for a financial year, would form your opening balance. Do you understand? In the following financial year. So your closing balance as at 31st December 2021 would form what you call your opening balance for 1st of January 2022. Right? The only difference that you would have is that your balance sheet items will still maintain their position when you move to January 1st, 2022. right? But your income statement, would, by the time you get to January 1st, 2022, and you generate your report, your income statement would have been written off to zero. You know, all your income statement balances, individual ledgers would have been written to zero. But then that profit or loss that the account for would have gone to your retained earnings. I explained that earlier. But when you hear someone say opening balance, when you hear someone say closing balance, don't be confused. You understand? It will only be opening balance if we are talking about a start, of a period of an accounting year. Whereas it will be a closing balance if what we are talking about is the end of an accounting year. So it's closing, and a closing balance of an accounting year would always form the opening of the other, right? I hope we all get that. So so that's the context of opening balance, right? So, and here we want to bring in our opening balance, as at 1st of January 2022 in the system. We want to assume those balances we have as at 31st of December 2021, we were keeping manual records, right? So we need to bring in our opening balance so that by the time we start doing transactions, our suppliers balance will reflect the correct thing. Our inventory balances would also reflect the correct thing. Do you understand? Now, the next thing is in carrying out an opening balance activity. What are those things you need to be able to, when you say these are your closing balance, what are those things you need? Like, what are those things that form your closing balance? What are those things that form your opening balances? You understand? So those things would be, primarily, you have your trial balance, right? Your trial balance, is the summary of all your ledger account, the summary of all your ledger account balances. So your trial balance would always be, oh, this is our plant machinery, this is our cost, this is our accumulated depreciation, this is for a certain period, this is our revenue, this is our expenses. You have them like that, right? And that is what, when you talk about opening balance or closing balance, that is what you primarily need a trial balance, right? And once you have a trial balance, remember there are some supporting, let me say, ingredients, that you can always use to support it. You know, Take for instance, we have what we call control accounts. When you are creating a ledger account, we have some ledger accounts are called control accounts. Why? They are called control accounts simply because there are some other subsidiary, informations or records that are reporting into those ledger. Now, what do I mean? For instance, you have your account receivable. You see that from this trial balance, we have account receivable balance, which is 1,050,000, right? But what we have here is not just account receivable. There are some information, there are some records that made up our account receivable. And what are those? Individual customers balance. So when you are treating opening balance and you hear someone talk about opening balance and you see a figure here, you don't just take this to your account receivable, right? You need to confirm the individual customers balance that made up this figure. So account receivable, account payable is equally a control account. So the payable is coming as a result of transactions of suppliers. You understand? Suppliers balances. Same as inventory. So these three, account receivable, payable, and inventory, they are primarily classified as control accounts. Why? Because when you say inventory, your inventory value is 336,500. That inventory value is coming from individual inventory counts that you must have done with respect to their cost. You understand? If that is what would have amounted to this. So when you are talking about opening balances, no, you are talking about the trial balance, your individual customers balances, your individual suppliers balances, and your individual inventory balances. Those are what you need to do to do an opening balance. And you will notice from the information that is in our class exercise, right? You see that we have our trial balance, which is all our individual ledgers, which they are primarily balance sheet items, anyways, from what I can see here, right? Then we also have notes. There's a short-term loan here, short-term loan of 1 million naira. So the 1 million naira is to be in credit. So I just noticed that it went to the other line. So this 1 million naira for short-term loan, by the time you are practicing, it should be in credit here, right? 1 million naira. So, but then your trial balance must always balance. Your trial balance is just a summary balance of your individual ledgers. So, what do we have in our bank? Your bank balance is everything, will be listed. So, and we also have here the schedule. See the opening balance of the inventory, which we'll be treating together. See the opening balance of the vendors, which we'll be treating together as well. See the opening balance of the customers. So I would just quickly uh, go ahead to enter those opening balances. But do we understand the flow now from creating our company to creating our records? Because you need to create your records within the system. Then before you start using your software, what are your balances? You could be asked that a company, just got an acquisition, of a software. They just start using the software. What are those things you think are primary? You understand? What are those things you think must be done before they start posting? One of those is ensuring that those records are being created, those master files records, your ledger account, and every other thing is being mapped, correctly mapped, right? Another thing is ensure that those balances are being captured. Do you understand? So now to capture your opening balances, you go to your company tab and you go to opening balances, right? So now if I come to opening balance, you know, what do I need to cater for specifically? I need to check the dates. I need to confirm this date. So what is the date as at what date am I bringing in this balance, right? So you can see for the with respect to that particular class exercise is specified 1st of January 2022, right? However, it is always best if you want to treat opening balances, you'd always use the last date of the last accounting year, which is 31st of December. And I'll explain why to you. The reason is that those balances, the truth is they are as at 31st of December 2021. But if you treat your opening balance as at 1st of January 2022, the implication is any transaction that you post, any new transaction you post into the first day of 2022, would have matched, with that opening balance that you've entered. And when you now generate your updated report as at 1st of January 2022, to be a combination of your opening balance and that transaction you've posted for that day. So based on practice, for standard practice, we normally advise if you want to bring in an opening balance of January 2022, always select 31st December 2021. Just take it one day back. You understand? So that by the time you are generating your closing balance, you would see your figure for opening balance, and it'll be separate from those transactions that you've entered, for January 1st. I don't know if we get what I'm saying, right? Okay, I'll just take it one step. We want to do opening balance, right? But then our opening balance in this case is 1st of January 2022, right? I said that when you are selecting the date, it is always advisable that rather than selecting the first day of a year, right? Always treat opening balance selecting the last day of the last financial year, right? Meaning in this case, I will just select 31. I just select 31/12, right? 2022. Some could still go ahead to 2021. Some could still go ahead to select 1st of January 2022, anyways. But the danger there would be that if I specify that my balance, okay, I've set a lockdown date. So I will need to change that. So the essence is this. Now imagine I've instructed my system to say, oh, my inventory balance or my receivable is 1,050,000. That was my receivable, right? That I want to bring in as my opening balance. But as at 1st of January, this customer, which is part of my receivable, that is owing this Bakers Nigeria Limited is owing us 200,000 naira, right? As at December, so as at 31st December 2021, he's owing us 200,000. And when I was creating the opening balance, I entered it, which is fine. If I had selected 1st of January 2022, which would be fine. But let's now see that we have one transaction again. On 1st of January, we sold to Bakers Nigeria Limited a goods worth of 100,000 naira on credit. That same 1st of January 2022. By the time, and you posted it successfully, by the time you regenerate your report, your position as at 1st of January 2022, this 200,000, right? The system would have added, the new 100,000 that you've just posted, and the balance you'll be having as at 1st of January 2022 will be 300,000. But that's not your true position for your opening balance. Your true position that you want the system to recognize is 200,000. So rather than to avoid such an error, why don't you use the last date of the past financial year? But it's just, anyways, you can still, if I don't know if you get it from that perspective, it's just an advice. Do you understand? But it doesn't really still stop us from 1st of January and all. But it's just advisable, that you select last day of last financial year, right? And let me just go on and check my my lockdown date. You can see what happened there. So I was trying to set my opening balances, and the system is saying I'm not allowed to post transactions into that date. Why? Because I've locked the period from the lockdown date. So I'll just quickly go back. Okay, time is fast spent. I'll just quickly go back, change the dates. I stated 31st 12 2021, right? Then I'll click on save, right? So the next thing is, these are all my ledger accounts, right? And these are the respective, debit and credit that they are expected uh, to be posted into. So these are my ledger accounts, and I just need to make reference to my trial balance here. And this is how you do opening balances. So my plants and equipment at cost is saying is a debit of 800,000. So all I just need to do here is just navigate to my non-current assets. Okay, I can just search the plant and equipment. It's a debit, so I would specify it in the debit column. So accumulated depreciation and expenses. I'm just migrating my balances. So accumulated depreciation for plants and equipment. It's a credit item. So I would paste it in the credit column, right? So this is how you treat the individual. So leasehold property at cost. So this is it. Is a debit item here. So those ones that are in debit, to put it in debit. Those ones that are in credit, to put it in credit. So accumulated depreciation for leasehold properties. So specify it like that. Then retained earnings 950. So retained earnings, it could go to okay. So 950 credits. And we have the next thing here. We have receivable and payable. We'll treat that shortly, and inventory, because those are, of course, those are control accounts, right? They have a special way at which you treat them. So, so okay. So the next thing is prepaid rents, 168,500. So prepaid rents, the debit element there. Short-term loans. So short-term loans, 1 million naira. So it's a credit element there. I'll just paste it. So then we have our banks. Zenith Bank 750. So Zenith Bank 750 debits. BTB 510 debits. Right? Then we have Sterling Bank 35,000 naira debits. So if we have any overdraft, of course, it will be in the credit. So cash in hand is equally a debit. So then share capital 1.5 million here. So share capital, so we can take it to be owner's equity, not contribution. So share capital 1.5. So now our opening balance is here to be balanced, because we are here to treat those. You see three things here. You see we have inventory opening balance, here, the system does not accommodate. We can't enter the figure, the inventory balance figure, and same as the trade receivable. The boxes are not active unlike the others. Then we also have trade payables too. Why? That is because they are control accounts. And how do we treat them? So we can treat them by navigating to our individual schedules, just like we have here, right? These are our individual breakdowns, because your inventory balance is not just it's not just that figure. It's coming from individual items. So now to do that, I would need to click on my add items, right? Add items. Then what's the value? What's the inventory value? I'll locate it here. 336. Okay. Then I'll just go back to uh, individual line items. So here, prawns item 0 to 10 quantities. So now inventory would have to do with the cost and also the quantity on hand. So inventory, these prawns is the cost price is 4,000 naira, and it is 10 quantity. So 4,000 naira, then of course 10 quantity. So no VAT, uh, should be on no VAT. So we don't want to recognize VAT on opening balances. So it's not appropriate. So the next one, Coca, was Coca. Coca is 20 at 5,000. Okay. So the next one is sorry. So this is 5,000. Okay. So the next one is 10 at 3,150 crabs. So 3,150 and it's 10, and 20 at 1,000 for fishes. So we are only entering opening balances, right? And we'll soon be done. Lobsters 2,000 at 20. 1,020. So ice blocks 15 at 7,000. So the costs 15 at 7,000. So you can see now there's a thumbs up. So our individuals in their inventory schedule, tallies with what we have on our GL. So we just click on save. That's fine, right? So we've been able to do that of inventory, and that is how it works, right? So for customers to pretty simple, just navigate to our customer. We just have 5 customers here. So bakers 200,000. What's the total? Total is 1,050,000 here. We need to specify it. Okay, so bakers is 200,000. Okay, bakers is 200,000. Next one is 100,000, 100,000, then 500. Okay. Then we have 150 for Co. No, okay. Conco is 150. Okay. Coco is 150. Noble Drilling is 100. Progress Limited is 500. Then West Atlantic is 100. Okay. Okay, good. So we have a thumbs up. That's fine. We click on save. Then we just do the final note on suppliers. Then we just say, with that, we are done with opening balances. Okay, so now 450,000 here. Specify it here. Then individual balances. We have going well 100, that 50. Okay, going well is 100,000. This is the amount we are owing them as at. Then we have pan promotion, that's 200,000. And Wadoye is 100,000. Okay. So are we good? Yes, we are good. So we click on see. So our opening balance here, you can see is actually fine. So when you do yours, you should have, the total debit and total credit must balance, right? And what you need to do here is to do update and continue, right? So update and continue. And with that, you've been able to treat, opening balances. I've explained to us what opening balance means. And the reason why we are doing opening balance is because we are migrating into a new software, right? But if you are not migrating into a new software, opening balance could still be applicable. But then you don't have to enter it just like we have done. But it simply means you just want to check your system. You want to check your system for your opening balance, you just go to the system and generate report. You generate your trial balance and you generate your individual customer and suppliers balance as same as your inventory valuation. Okay. So so I think we are fine. Okay. Mm. Okay. So uh on my hand, I would hand over to my colleague Olabi, who would just take us through the last part of today's training, which is of course the suppliers, transaction aspect of it. Right. So in the meantime, if you have questions, drop your questions. I'll be attending to them. So Olabi, you can take it from here. Thank you. So if you have any questions, please endeavor to drop it and I'll be attending to your questions from the chat section. All right.
All right, everyone. I hope you've been enjoying your time so far with us. I understand that this has been, very, very educative for us. We've been able to, do quite a lot of things within the system. We've been able to, look at how we could actually set up our company details, adding, setting up financial period, how to log our financial period. We've actually looked at quite a lot of things, after company details, we are actually put through on how to navigate within the system. We've been taught on how we can actually, view various dashboards within the system. We are also told, how we can actually start adding master files to the system. Master files in the system, according to what we explained earlier. These are the list of your customers, the list of your supplier, your chart of accounts, your inventory item, and so on and so forth. So, and I believe you've been enjoying, all these, various wonderful things. But uh, what we'll be doing going forward now will be based on the regular routine of an accountant within the system. What we've been doing so far, know, if you are an accountant and you're entering into a system that is already running, then it means that majority of what we have been doing must have been done for you. You are not coming to the system to add their item to add, except if you're adding a new item. But if you are being employed to any firm today, or you are actually at the interview, majority of all these questions are relating to uh, opening balances, adding new customers, maintaining your company's details, setting up your VAT period, locking financial details must have actually been, done and set up for you. But what we'll be doing going forward would actually relate to what you as an accountant will be doing on a regular basis, which would be on ending, activity of an accountant. And what do we mean by that? This is the daily transactions of their accountant. If you create customers, if you create suppliers, bring all this into the system without the daily transaction, then it means the system has actually not done anything for you. So it means that from this moment we want to look at how you actually carry out transaction. But we don't really have much time today. We really have the few minutes that we've actually spent on break, which we would recover. by just looking at suppliers transaction briefly today. While tomorrow we actually go into details, demystifying what transaction actually entails. How do we really carry out transaction? Transactions such as invoices, such as payments, credit notes, depreciation, posting of journal, bank reconciliation, and all. Because this is what accountants will do on a daily basis. This is what is expected of us. This is where questions will actually arise, where we actually go for interview. So we need you to be very attentive at this point in time, so that I believe if you have not been jotting at this point in time, you would need to get yourself a jotter so that you can always jot at 1 or 2 points. So if you are, using any software, if you want to migrate into using any other software, or you want to get, maybe you want to change your employment, you want to, or your firm have been using manual, way of recording and now want to move into an accounting or ERP system. It means you need to pay attention to this information because they are critical. They are actually these are the knowledge you get here today are what will make you outstanding, and you would not longer be a digital accountant. Rather, you will be, you no longer be a manual accountant, you would actually be a digital accountant. So, we would actually take a lot of questions immediately, but let me just go straight into it, and we look at how we can actually start, carrying out transactions within the system. So if we all can, hear me very clearly, which I believe we can, and at this point in time, I also believe we can also see my screen. So if we can see my screen, can we please, signify? Can we see the screen I'm currently sharing? Okay. All right. Now it's good. We can see our screen. So we don't want to really take much of our time. We'll be doing this under 20 minutes so that tomorrow we go into, proper transaction. But today we just want to introduce you so that we can actually cover, majority of the activities for tomorrow. So we'll be doing this under the next within the next 20 minutes, and we then take question and answer. By 4:30, we all should have been, out of here. So the next 20 minutes, we should have been done with a few suppliers transaction. All right. So when we talk about, supplier transaction within the system, what are we actually referring to? We're actually referring to, you know, uh your purchases and payments to your vendors. Like my colleague actually said earlier, that your suppliers, these are people who provide service to you. These are people that provide service that relate to your trading activity, and those services that do not relate to your trading activities. So how do you recognize, all these transactions in the system? And let me start by explaining who a supplier is. A supplier is somebody who you've actually incur, who on a regular basis you incur liability to, you understand, and you actually make payment to. You within an accounting system, you would not actually have the need to create a supplier if all you do to that supplier is, maybe cash transaction. For instance, please can you ask, can we confirm if you can hear me? Can we can you hear me? Some people are saying they can't hear me. Yeah, am I audible? And can you see my screen? Okay, but it seems I'm back now. All right, thank you, Abiola. All right, thank you. All right, let me just proceed. So we said you would not actually have need to create a supplier if you do not actually or owe this supplier. But because majority of the transaction that take place on a regular basis is that at some point in time, the transaction you carry out are not on cash basis. You actually, want to incur liability at some point. You don't want to keep your record based on that. You do not want to create the expense at the point of payment. Because of the Akura concept of accounting, you will most likely have created liability and also make payments in future dates. For you to be able to track, who and how much am I owing a particular figure, it means that you need to create each of these suppliers in the system so that at every point in time you can say this is the amount I am due to pay to complaint A. This is the amount I am due to pay to complaint B. This is the outstanding, this is the goods I'm actually expecting, from complaint A, and these are the goods that complaint A has delivered. I'm here to make payment to. So you can always track your logistics to know goods that will arrive tomorrow, goods that you've placed order for, goods that are yet to be made payment for, and all the likes. And this is always useful for you to be able to keep accurate, information within the system. And in most cases, people don't just go and create supplier randomly. Some supplier are created as a result of transaction that actually take place between uh, your company and that particular vendor. So if we would need to actually carry a supplier invoice within the system, it means that we can just take it a little bit backward to look at the is it all transaction that actually starts with supplier invoice? No. If you look at the way it's typically work in most organizations, majority of the suppliers, what they do basically, majority of the organization, what they do is before you even notify your supplier that send me 10 pieces of this laptop computer, you must have actually request, for their, quotation. So once you request for their quotation, how do you actually process this? Once you get quotation, which most likely will be done by the procurement department of any organization, what you do is you submit that quotation for approval. Oh, sir, you requested that we purchased a new laptop. This is the price for individual laptops, and this is the quantity. The total value is this amount. Should we go ahead to purchase? Your superior, your line manager can request for a discount. You negotiate all of that with your supplier. Once you reach an agreement and you have been given the approval to do that, then you can now formally, notify the supplier that the supplier should supply those items. And you don't do that with the word of mouth. You don't just go and say, oh, you call on the way most organizations do today. You don't just call on them and say, supply me 10 pieces of this item, supply me 20 pieces. What you will have done, you understand, is for you to raise a purchase order document within the system or manually, because this serves as a written instruction from you to your supplier to show that you are actually, formally requesting that they should supply you 20 pieces of this laptop computer at this agreed price. You understand? So, and if we want to look at that, because we are using an accounting system, the system has actually made this very easy for us to do. It means that we don't need to manually generate a purchase order document because you are now using an accounting software. And what the system will do for us is, because this is just an ordinary document, it doesn't really affect our financials, because at this point, what we are only doing is to tell the supplier that supply me this item. So until the supplier supply you this item and you receive them, that is when our financial transaction is actually taking place. So, but the system help you to organize yourself, help you to streamline and reduce the manual work you've been doing. And this is what we want to look at, how how to do this within the system. So we'll be raising supplier invoice, but we would actually start by raising a supplier purchase order. Then we'll look at, this supplier purchase order. Once the suppliers actually supply this item how can we then convert it to invoice? Because until we convert it to invoice, we are not yet owing that supplier. So, but immediately we convert, maybe part or 100% of the purchase order to invoice, then the system will now display that we are owing and we are due to make payment to that supplier. Then once that is done, we can then proceed into making payment. So at each of these points in time, if you view your financial information, you would see that they would actually report different figures at each point in time. So that is how an accountant would know that, oh, I am seeing a liability, which is a trade payable of this amount. It means I must have done this. I must have done. You can easily go into the system because every action you take within the system has, financial implication. All right. So I would quickly go into the system and then let us know how we can actually raise a supplier purchase order. All right, let me widen my screen. All right. Yeah, I believe this is fine now. So for us to raise a supplier purchase order within the system, we need to go into the supplier module. Then we go to transaction. Then we can actually see supplier purchase order. Supplier purchase order. So you can click on supplier purchase order. So if you look at what we have here in the system, currently we do not have any existing supplier purchase order. This means because this is a new system, we do not have any existing supplier purchase order. If it were to be, once we start raising one or two documents, you will see the system listing all our previous supplier purchase order documents on beneath this line we have here. So it means that we can easily view any supplier purchase order that has been raised and edit them or convert them to invoice. So now that we do not have any supplier purchase order documents, I can easily click on add purchase order. So once I do that, the system will take me to the screen where I can add a new supplier purchase order. So it is important for us to select the accurate information that we have here. The first information the system is asking is who is this supplier to whom you want to raise a purchase order. Then I'm saying if I go to the class exercise, I would check who are we raising purchase order for, who are the supplier we actually want to purchase from. From what I can see here, I see on the 2nd of January 2022 from Greenwell Nigeria Limited, we purchased prawn. So it means I need to raise a purchase order from the supplier called Greenwell Nigeria Limited. So because we are trying as much as possible to follow the information and the guideline of the class exercise. So this, we can always replicate this to our own various names. Based on the supplier we've created, we can always use this information, to replace whichever one that we are using. But for the purpose of this class, let's just maintain these names and we'll continue like that. So Greenwell Nigeria Limited. All right. So from what I'm seeing here, immediately I select the supplier, the system is showing me the balance due to this supplier that I'm owing the supplier 100,000. Oh, hope you remember. Oh, I said yes, I remember. Then the next thing I want to do is the date I'm actually raising this document. So from what we see here, the system is saying that on the 2nd of January, so I want to select the date, 2nd of January. You can always, use this date button to navigate to the date, or you just type in the date, whichever one is easier for you. I can say it's 02/01/2022. Then the system accept that, or I just click on this calendar button, then I navigate to the date I actually want to. So the system is also asking me the delivery date, which day am I expecting that this supplier deliver this item. I leave it at the next day, which is the first day of the following month. Then is there any discount or any other information? Then I leave it blank. The next thing I want to do on this information is to now put the line by line item. I want to put into the system the specific line item. What are the item or the service I actually want to purchase from this supplier? We need to be able to choose them. Sometimes it might just be 1, sometimes it might be 5, it might be 10. So we should be able to say that these are the list of goods or service that was purchased from this supplier. So if I scroll down here, I will see the system is asking me that I should select each and every item that are actually purchased. So then that leads me to go back to the uh, class exercise, which is for me to know what item was purchased from the supplier. So I can see that the first item here is we purchase prawn 10 units at the rate of 5,000 naira per unit. So prawns 10 units at the rate of 5,000 per unit. So I select the item, which must have been created in the system. Prawn unit. This unit stands for the unit of measure. So we don't set up unit of measure. We just want to put in the quantity, which is 10 in this case, and the price. Now we need to be very careful, which is why I say that it is very important for us to. Can we all hear me? I don't know if I'm audible enough. Can you hear me? Please, if you cannot hear me at any point, you can always drop a chat for me to know. Right, thank you. So it is very important for us to listen, because this little information really goes a long way to decide, how accurate our information would actually be. So what I really want to do here is for us to, the system is asking us a very important question here at the point where, it is easy for me to say that the quantity is 10, but the price, in accounting, we have various kind of price. We have price and we have value added tax that is always attached to the unit price. The system is asking us a very important question here. It's asking us that, are we inputting the inclusive amount or the exclusive amount? Why is this important? It means that if this item is vetted by the supplier, it means we need to know, as the accountant of the firm, if each of these price we are entering into the system contains the VAT already, or the VAT will actually be charged, on the item, the price we are actually entering. What am I trying to say? The system is trying to ask us that, is this the gross amount or the net amount? I'm trying to say that in another word. Is this the net amount or the gross amount? A typical example would be that when you purchase an item for 10,000 naira, and normally the VAT on that item should be 7.5% of that amount. In this case, that should be 750. So it means that the system is asking us that, when I say what is the price of this item, are you typing in 10,750 or you are typing in 10,000? Because the system needs to understand. If you type in 10,000, you need to specify that the price I'm entering is exclusive of VAT. But if you are typing in the unit price as 10,750, then you need to specify that the unit price I'm entering into this system is inclusive of VAT. So because the system will need to separate, doing its own calculation, the VAT element from the cost element of this item that we are purchasing. So it is not, it is important we are able to separate them. But for items that are not VATable, then we don't really need to stress ourselves about which is it inclusive amount, is it exclusive amount, because both amounts will be the same. So if the 10,000 naira is not VATable, it means that both inclusive and exclusive amounts would both give me 10,000 naira. So for the purpose of this, we can see that these items were not VATed. So there is no VAT inclusive. So it means that we do not really need to be concerned about if this item is actually if this price is actually the inclusive amount or the exclusive amount. But if this item were to be a VATable item and we decide to change, we can see the checkbox here. I believe we can see the checkbox here that is asking us use inclusive amount or use exclusive amount. So immediately I click on this checkbox, what we are having here will actually change. The system will be able to change this price to inclusive amount. Immediately I click on this checkbox, the system will change this to inclusive amount. It means I'm telling the system that this amount I'm entering already includes VAT. So, but like I said, because this item is not VATed, it's just a basic food item, we do not intend to charge VAT, or the supplier did not intend to charge us VAT. So we are not even bothered about our decision, but we need to be conscious of this implication if we're actually dealing with an item that is actually VATed. So let me just continue because of our time, but I just took my time to explain that so that we can really understand the implication of VAT on each transaction we are carrying out. All right, for 5,000 naira each, then the system will do the multiplication for me. Then I can go to the next line to select the next item. The next item is coca fish, then 50 pieces at the rate of 7,000 naira each. All right, I select the next item. Class 50 pieces at the rate of 7,000 naira each. The system has done the mathematics for me. Is there any other thing? No, that is all from Gameworld Nigeria Limited on this particular day. So then, since I'm done, you can see we only purchased 2 items from this particular supplier. I can decide to just save, and I can decide to do what we call save and new. You know, I don't know. Let me just briefly explain. But before we go even into saving or saving and new, we need to confirm our total. What is the total value due on this particular, if this purchase order were to be converted to invoice, how much are we to pay? So I can actually see the total amount on this value to say that, is there any discount? Have I given any discount on this item? No. Total exclusive value is 400,000. Is there any VAT? We said no. Then the total exclusive amount is 400,000. So if this is in line with what we are expecting, then it is fine. We can decide to save these documents, or we click on save and new. The basic difference between clicking on save and clicking on save and new is that when you click on save, it takes you back to the list of purchase order, because you are currently creating a purchase order. So it takes you back to the list of purchase order. But by the time you click on save and new, it saves this document and it maintains this screen for you to be able to enter a new record. So if you have a lot of purchase order to enter into the system, I would always advise that you click on save and new so that you don't have to go back to the purchase order screen and click on add purchase order again. No, the system will take away this information off your screen. Then it gives you a blank new screen so that you can actually process information with it. All right, let me click on save and new so that I can enter information for the 2 remaining suppliers before we then convert some of them to invoice. All right, the second supplier is Dark Arc Finance Limited. On the 2nd of January, also we purchased some item. So I need to select the supplier, Dark Arc Finance. What is the date? Which is very important. 2nd of January, 02/01/2022. Then I go to the line by line item. So I can see here now that we purchased scrap 15 units at 3,000 each. So I need to select that here, crabs, 15 units at 3,000 each. Sorry, 3,000 each. Yes. Then we also purchase catfish, 20 units at 1,100 each. Fish, 20 units at 1,100 each. Then the system is doing the multiplication. Is there any other thing? So that is all for Dark Arc Finance Limited. Then I want to check my figures. Are this fine? If this is fine, then I also click on save and new so that I can quickly capture the last purchase order. So we are deliberately starting from purchase order. It doesn't have to mean that you need to start all your transactions from purchase order. Like I explained earlier, the only reason why we are starting from purchase order is that we can see the relationship between purchase order and supplier invoice. So if all this transaction has actually taken place already, then we don't need to actually raise a purchase order in the system any longer. We need to just probably go directly into we need to actually go directly into the transaction, which is supplier invoice. So let me just carry out the last transaction. Then we purchase from Pan Ocean Nigeria Limited. Pan Ocean Nigeria Limited. What do we purchase? is the next. Okay, the date of purchase is the next thing, which is still the same 2nd of January, 2022. So I want to just type in 02/01/2022. And I want to select the line by line item I purchased. Here I purchased lobster 10 units at the rate of 5,000 naira each. Lobster 10 units at the rate of 5,000 naira each. So lobster 10 units. So this is all that we've actually purchased. This is all that we've actually purchased. All right. So now that I don't have any other purchase order to carry out within the system, so it will not actually be advisable for me to click save and new, because it will still maintain this screen. So it is easier for me to just click on save from this screen, so that it take me back to the list of my purchase order screen. All right, so I'm clicking save because I don't have any other purchase order to enter. So now it's bringing me here. So if I've been clicking on save and new since, it would have been bringing me here, then I have to be clicking add purchase order to add in the new one. So that is what we are trying to avoid by clicking on save and new. So from what we have now in the system, our time is already fast spent. We now see that we already have 3 purchase order documents. So I will quickly convert 2 into invoice, or let me just, I'll convert the 3 into invoice. Then tomorrow we start with making some payment and things like that. So we just finished today's section by converting this purchase order into invoice. The only reason why we are actually doing purchase order is just to show us the relationship. What really will affect our book is the supplier invoice. So what we've done so far on suppliers, if we check any of our reports, till date will have no impact, because supplier purchase order is only a document within the system. It doesn't have financial implication. You understand? So let's convert them into invoice, then we call it a day. So tomorrow we just continue from here, and we get the reason why we're trying to cover as much as possible today, so that we have time for reporting and checking every other thing we've done tomorrow. So let's convert this purchase order to invoice. So if you're on your purchase order screen, for you to be able to convert a particular purchase order, so let's say in reality, why would you need to convert a purchase order to invoice? You will need to convert a purchase order to invoice if that particular supplier, let's say, from what we've done now from Greenwood Nigeria Limited, we requested for prawn and coca. So if this particular supplier has actually supplied us this item, then it is important for us to recognize that they've supplied us, because here we only create. It is possible that at the end of the day they might not be able to supply, so we need to create another purchase order for another vendor. But now, if they've been able to meet up with that call, because we've created this supplier purchase order and we've sent it to them, now they've supplied us, we need to recognize that they have actually supplied us this item, because we need to be able to debit our inventory. We need to be able to increase our inventory, then also increase our liability to them. You understand? So the system is going to do some accounting entry, but as we speak, based on the purchase order we've processed, no accounting entry has been passed. Your ledgers have not been updated, because they are just mere documents within the system. All right. So for us to convert this into into supplier invoice for each of the supplier, or for each of the purchase order, don't forget how we get there. We come to suppliers, transaction, then supplier purchase order. You click on the particular one you want to convert into purchase order. Then you go to the action tab. Then you see create invoice. Create invoice. So by the time you click on create invoice, the system will say that you want to change the status of the supplier will be changed from purchase order to invoice. He said okay. Then the system will process this information into a supplier invoice for us. Can you see that this is fantastic? So it means that we don't need to go to the supplier invoice to start entering this information one after the other. No, we only go to convert directly from the supplier invoice. So we go directly to the supplier account to convert them to supplier invoice. So we can see here now that we want to convert this third one, which is Ocean Nigeria Limited, into a supplier invoice. So the only thing we need to do here, two things is we need to confirm the date that we receive this item, because it might be different from the day we raise the purchase order. By default, the system will choose today's date. The system will assume that you are just receiving them today. So, but if today is not the day you are receiving this item, it is important to change the date here to the date you are receiving those items. You understand? Because it is different from the date you raise the supplier purchase order. So you need to change your date. And the second thing you need to change here is if the value you are receiving, let's say you raise purchase order for 10 pieces, but what they actually supply is just 5 or 8, then you need to update the quantity here from 10 to 8 or 5, because this needs to be the actual number you received. Not in all cases that you will request for 10 and the supplier will supply you 10. Sometimes they will supply you below what you actually, requested for. Oh, yeah, they will supply below what you requested for. And in few cases, they will actually supply you above. Then it means you must have actually have an agreement for them to supply you above. Then you raise an additional purchase order to that effect. So now let me just change this date to 2nd of January. Then I post this information. I'm leaving every other information constant to say that I'm receiving the entire 10, and I click on save. So I click on save. So it means yes, we've created our first supplier invoice into the system. So we can do the same for the remaining 2 supplier purchase order. We can do the 2 for the remaining 2 supplier purchase order. Then we go back to our purchase order screen. We can now see that this particular one has been invoiced. Can we see the status? This status is now reading invoiced because the status has been updated into invoice. For the remaining 2, we are yet to create an invoice for them. So that is why the status is still reading overdue. And the reason why it is overdue is because, we selected January and now we are in August. So the due date we selected when we were raising the purchase order is past already, you understand? So that is why it's raising overdue. So I want to now convert the remaining 2 into invoice, and we call it, a day. So let's not forget to go to action, then you do create invoice. Yes, click on OK. Then the only thing I want to do here is also to change the date. 02/01/2022. Yes. And I click on save. Don't forget, if the quantity you are receiving is below that amount, you need to update the quantity to the actual quantity received. So I want to convert the last one here so that all our purchase order will be accounted for. We are telling the system that we have received everything. So that is what we are telling the system here, that we received them. So I want to create invoice for this last one also. What dates I am creating this invoice? On 02/01/2022. All right, so I click on save. So we can now see the different information we have in the system. Now we have 3 supplier invoices in the system, and the status of the 3 of them is showing overdue, meaning that the due date that the supplier has given us to pay, we are yet to pay. So this supplier invoice is past due. So we would actually share more light on that tomorrow, because majority of the supplier will give you, I'm giving you 30 days, I'm giving you 15 days, 14 days, 30 days, 60 days for you to make payment. But since we've raised this invoice since the 2nd of January, and look at the date we had now, we are now in August. So the system believes that this invoice are already passed. So we are already owing beyond the period, the grace period given to us by the supplier. So the system is just giving us a sign, like a warning, to know that, oh, it's time for you to pay this person because it is even long overdue. So, but we go into the payments and every other information details today, tomorrow, so that we don't really stress ourselves. We want to allow you to go and rest and refresh, reflect on what we've actually taught you so far today. So tomorrow we complete, suppliers transaction, then we go into so many other wonderful transactions we have within the system, the customers transaction, the banking transaction, the journal entries, and we now go lastly into reports. So we generate various profitability reports, financial position, your trial balance, and various other reports like that. So we'll do all of that tomorrow. So we encourage you to join the session early. Uh, the session would launch immediately by 12 o'clock tomorrow. So we urge you to be online and do not miss out. So we'll just take a few questions before we call it, a day. Is there any questions that we have? If there's any question, please let's drop them. Or if you really want to speak, if there's anything apart from typing, if you really want to speak, you can actually, request for microphone. You can just raise your hand. Okay, somebody raised, and so let me clear the existing hand that was raised. So if you want to speak now, you can raise your hand so that we will hand you over the microphone. Okay, Larry Akobi wants to speak. Okay, let me give him the access to speak for the next few minutes so that we can. All right, we already have another person. Okay, Larry Akobi. Larry Akobi, your mic has been on mute. You have the access to speak now. You can unmute your mic and speak. If you have any question. So if there's any other person who wants to ask question in person rather than typing, you can just click on raising of hand on your screen. Then we would give you the access to speak. So Larry Akobi, please, you can unmute your mic and ask your question. So if there is no question, then by 4, okay, Abiola wants to ask question. So let's give him the access to talk. All right, Abiola, you can unmute your mic if you can unmute your mic now.
Answers. Hello, can you hear me? Please,
Yes, we can hear you.
Mine is not a question. I really want to appreciate the facilitators. Both of you have done excellently well. Actually, you've refreshed our memories. And those questions I had wanted to raise, I had put them in the chat box and I've been receiving responses. So thank you. I really want to appreciate this. Yes, things like this. That is all what I want to remark. Thank you.
Hello.
Thank you so much, Abiola.
Hello.
Yes, Larry Akobi, yeah, thank you so much. You can ask a question.
Can you hear
me? Yes, we can hear you.
Please, you promised us some materials. I haven't seen mine, so that you can be refreshing our mind. We can be going through and informal revision.
Oh, okay. Thank you. We actually sent an email to you. The email instruction that give you the access to be able to join this platform. So if you check the first section of that email, we specify that we've actually attached 2 documents to that email. The first is the class exercise, while the second document is the training manual. So because for everything we've been training on so far, there's actually a manual that we actually took our time, you understand, to create for you for the purpose of this training. So there are 2 documents attached to that particular email we sent to you. So you can download those attachments, includes the class exercise and the training manual. So you can always, use the training manual to read on it, and it will guide you through on creating any or carrying out any of the transaction or activities that we've been talking about. All right. So
Thank you.
okay, so we also have okay, Zay. Yes, would give you the ability to also talk now. Okay, Zay, you have the floor. You say?
Yeah, that's Timothy. That's the look at Timothy. Yeah. So
Okay. Okay, Zay, you have the mic now.
you can just unmute yourself and
So Olukoya Timothy also, you want to speak? We've given you the access. Please, after okay, Zay, you can unmute your mic and can also speak.
Hello, can you hear me?
Yes, yeah, okay, Zay, we can hear you.
Oh,
Okay,
good evening, please. Okay.
I just wanted to say that most of the things we have been doing here, like um, people like us that we are not even into accounting at all, like it was kind of confusing to a very large extent. So I don't know if there are ways also you can help people like us because it was to an extent, sincerely, it was very, very confusing. But we just tried to grab what we were doing. Thank you for how you have helped us. Yeah.
All right, thank you so much. Okay, so yeah, okay. What we can do is for those non accountants among us, we'll try to reduce, and we've been doing that as much as possible. The accounting terminology that we are using, we try as much as possible to reduce them so that we talk, the way it should be. You understand? So we don't really use. You will notice that we don't really use much of accounting term. We try to to be general as much as possible. But I would, uh, by the time you watch, what we can do is that this video is being recorded, this session is being recorded. Would actually share, the recorded session with you. So by the time you watch it, like one or twice, by the time you watch, you'll be able to understand. You'll be able to understand, what we really talk about. If you are not an accountant, you might not be able to get what we're talking about from the first from the first view. So you can just all right, Olukoya Timothy.
Good evening.
Yeah, good evening.
Thank you for the time out. I actually enjoyed every bit of the session. Now, shortly, I have a question in respect of how I can access this page, I think website, because I can see it's limited. The period by which one can access it is limited. So, and from one of the mails you sent to us initially, we were told you can access it within period of 30 days. I later received another mail that said it will only last for 10 days because I don't have access to Sage. What's it called? Software on my system. I don't use it. We only use Tally in my office. But I just felt like let me upgrade myself. Let me see how much I can, add this knowledge of this Sage to what I already know. That was what I had to put into this training. Thank you.
All
Hello?
right, thank you, Timothy.
Thank you, sir.
Okay.
so Timothy said something about him having access saying he has 10 days. No, it should be 30 days. And after the 30 days must have expired also, we would also show you there is a demo company, where you can have access to like that it's not restricted at all. Right. So
Okay.
we would also show you, we'll walk us through that tomorrow. But for your own company, for that, it will be 30 days, but you still have access to a demo company that you can always use to practice, and
Okay.
do endless transactions. Yeah, we'll show you that tomorrow.
Thank you, sir.
All right, same here.
All right. All right. So let me enable. Osas, Osas, and I think
I
Abiel
think
is just
that's just us.
all right. Osas for impact. You can ask your question, please. I think you are the last person we have on the queue here.
So you can mute yourself. Like there's a microphone icon. So you just tap it to unmute yourself. Okay.
Okay. I want to say thank you very much to the facilitators so far. I've benefited a lot. But I still want to join my voice with the other man that talked about material. I wish you could have material, even if it's a soft copy, so that interval when we get stuck somewhere, we can easily run to and just peruse it, go through it, and then pick ourselves up again. I want to bet for that. You can help us
Okay.
with a soft material.
Yes. Just like my colleague Olabi stated the other time, we sent the material to your emails already. If you look at the email we sent for sign up, you would see, the materials we attached there, like the manual and also the class exercise. So the only thing we'll be needing to send to you after this session is that of the video recording, right? But for the manual and also that class exercise that we are making use of, if you check your email, it's been sent as an attachment. But if you can't find it, then of course you can always send us a DM on WhatsApp. Then we can, if we can, send to you.
All right. So the material looks like what you currently see on my screen. It have everything we've talked about so far. Creating customer, bank and every other thing. So it's specifically tailored to what we've been talking about since, and we actually took our time to make sure we prepare the material in detail. So you can any day, anytime, open the material, read on it, and you would always, learn a lot. It has pictures and everything for to aid your learning. So please do well to check your email. You would actually see, the material there, and it will be of great usage for you. Like you said, if you cannot still find it, you can let us know. You can send us a message on WhatsApp. Then we'll forward it personally to you. But I'm sure that we'll send it to we've sent it to you, in the same email that you used to join this platform. All right, thank you everyone. We've actually come to the
I
all
like to
right. You want
share.
to
Okay. So just want to show us this. Uh, okay, just one moment. I need to be the presenter. Okay. So just to call it a day. So just a reminder about our firm. So we are Droidedge Consulting, and of course we are a team of seasoned and experienced in the ERP and accounting system consultants. Right. So as you can see, our services would include sales of business management solutions, implementation of business management solutions. So
you want
we
to share
equally
your
put to
screen?
it. Hey, I'm doing. Can't you see my screen?
Okay, no, your screen is currently not shared. Okay. Yeah, no. Okay.
Is it showing now? Okay, cool. Okay, so like some of the applications we support, say just 3M, say 300C, Sage 200 Evolution. Then we do, of course, a business cloud accounting, Zoho software, just like I mentioned, books, inventory, CRM, and the likes, right? And we do QuickBooks, then we do Microsoft Dynamics. So, yeah, some of our information. So our website, droidedge.com. If you have any queries or anything, you can send us an email, info@droidedge. So we also set up systems, for businesses or companies, as the case may be. So whatsoever activity, logistics or procurement, inventory, fixed assets, that's what we do, right? It's it. So So let's. I can't wait to see us tomorrow. Tomorrow promises to be, much more detailed, and trust us, it's a training you would, you'll be proud you attend at the end of the day. All right, thank you so much. I think that'll just be it from my end.
All right. Yeah, everyone. So nice having you for this session. Please don't forget to join us at 12 o'clock tomorrow. Uh, Thank you so much. We're looking forward to seeing you tomorrow. Bye for now.